How many chairs are you sitting on right now? Are you all in on the chair? You put on one pair of glasses, you've got one pair of AirPods right now. You're looking at me through one screen. Like, you're using one microphone. That's a one microphone. Like, you trust it? Is that conviction? Seems kind of scary. Why don't you diversify? Why don't you use 10 microphones? Did you drive in 10 cars at the same time or one car at one time? Do you drive down one street? Aren't you afraid that you're driving down one street? You know? Do you take a different way? You get on one airplane? Are you convicted? You put your entire family in the one airplane, aren't you afraid? When you use knives, do you have copper knives, wooden knives, steel knives, aluminum knives, rubber band knives, diamond knives because you're afraid to commit to the right knife? So my point really is, ultimately, if you're a rational individual, it's a tool.
These ain't no gas jeans. I dropped out of school, I'm still getting mad, but nigga don't test me. I play to the left, they went to the right, they try to finesse me. Still running around with that blicky, I hope they don't catch me. Police ain't raided that spot, so we went to the next street. Play like I'm dumb, as soon as it pop, I'm going retarded. He say I'm hard and he say I'm garbage, I'm rich regardless. We in Miami in the middle of the winter and we on them jet skis. If we in Atlanta, I'm running and catting and working the red.
I cannot mention my homies inside of my song cause I know they be trapping a lot. I can't keep taking these pills when I'm in the trenches, they say I be capping a lot. I know a nigga who said he got rich off the dope, but I know he be acting a lot. I know some niggas who said that they took down the city, but niggas be lacking a lot. Yeah, that shit was awful, nigga had that dog food. That day they shot you, I slid on the mongoose. You could not come back around me, you turned your back on me, I cannot forget. The police was lying, they said that they caught you, but nigga, they made you admit. Your name was fine, you put in that work, they took your stick, you a bitch. Fuck my ops, they be on my dick, they all be mad, we rich. Lock that door, where them bows at, let's get it. Search for his gun, where his pole at. We on his ass where his shows at. He get away, we on his ass where he parole at. I be hating when these rappers call these rappers brothers. Only the family on my ass, bitch, we got each other. I popped a perk and drunk a gallon, man, that hurt my stomach. Man, what? Doing the dash inside the lamb, that shit had made me vomit. Fuck from the back, I pull her hair, she screaming while she coming. Got four them G-locks, they be clutching every time they serve me. With all that rah-rah like you like that, come around, you nervous. Sneaky talking like you like that, now you acting turtle. Yeah, you ain't like that, you ain't catch a murder. I be threatening me on my DM, we ain't never worked. Bleed, free the Steve, yeah, I call him Kirk.
Hellcats and Trackhawks, man. Yo, what the fuck is y'all doing? How y'all feeling? How are you all living, man? Welcome back. Man, do I really look 5'9" when I sit in the seat? Because there's a lot of space above my head. Is that really what... everyone here just thought I was 5'9", man. Or what, man? What the fuck is good, ladies and gentlemen? How are you all doing? How are you all feeling? How are you all living? Look, I got a lot to say today, okay? I want to just preface by saying it's a good day. I have a big smile on my face. Regardless of what happens from today, 8:42 a.m. EST forward, man, you deserve to put a little smile on your face. Everyone wants, don't smile yet. I'm shorting it. You deserve to throw a little smile on your face after what us crypto men have experienced over the last, I don't know, year. 1010 was a year. It's basically a year ago. So we have a lot to talk about as it relates to crypto. We're just gonna get right to it, really. Like I want to just fucking focus up. It's time to focus up. It's really time to focus up. We're gonna talk about the coins. We're gonna talk about the market. We're gonna talk about Hyperliquid. We are going to talk about we're gonna talk about macro today because it's pretty funny. Like I sort of not randomly, but semi-related yesterday started talking about the yen carry trade in macro and Besson, and then we have this announcement that comes out yesterday where the government is like, Trump admin's like, we're controlling the yield, and then everyone's like, oh my god, debasement. Hour later, Bitcoin fucking pops. Now I don't fully understand if it popped because of that or it was just the bottom 4 year cycle. Like I don't know exactly, but feels like a really genuine catalyst. And so we're gonna have Phage out come on, who posted a sick podcast about this. We're gonna watch it. Phage out's gonna come on at the end of the stream today, and we're gonna talk about controlling the yield, brother, because it's not controlled. Besson makes this announcement. They up the cap or whatever it is. They can buy back $4 billion of 30-year bonds. Yield dumps hard, and then it's higher than where it was. Like it's higher than the line in the sand, which made Besson scream uncle, which made Bitcoin go crazy. I think this is sort of what it feels like. At the same time, it felt like the market forces were just ready to play ball. Like it felt under the surface, social trading on chain. Like it felt like we were just brewing. Thanks for Moderna yesterday. You're welcome. So we're going to talk a lot about crypto, about Hyperliquid, about debasement. There's some GTA 6 updates, OpenAI IPO updates. Unitree is live, as we know. CFTC is meeting today. Market open is probably going to be electric because at the same time, tech stocks look horrific. I have a segment as well that we need to start talking about bio. After this Moderna thing, it's like, fuck, that was insane. And we're going to do a little bit of a bio segment. And then Phage Out was going to come on at late. He's coming on late, 10:45 EST. So we're going to do a full stream. Phage Out comes on. That will be our real macro segment. He tells us how bullish we can be. And then we are going to get off. I got a physical therapy appointment. I'm going to eat dinner, take a nap, and then I'm coming back on for Good Alexander. And Good Alexander is a fun one because I would argue he's been one of the biggest bulls, but for like not for structural purposes, not because on-chain is hot or pump fund is revenue. It's like the ideology behind it, behind like cryptocurrency and like inflation. Like these things are playing out. It's nuts. So Good Alexander's going to come on and fucking freak everybody out. But man, we got a lot to talk about. We have a lot to cover. And I woke up every hour. I woke up every hour last night, and it's just like I went to bed last night and I'm just looking at the charts and it's just printing this pattern of holy fuck, it's not going to go down. And look, man, yeah, you're telling me Treasury's faded the entire intervention move nearly instantly, and now Bitcoin is at $72,000. What's going on in macro right now is fucking war. It's insane. I wish I paid attention to macro prior to 3 days ago. It's wild what's going on right now. Besson is going to war. He's saying, call my bluff, and they're doing it, and he's losing. They're calling his bluff, and he's losing right now. It's fucking electric. So anyways, it's a big stream today. I'm a little bit of a mess. I didn't sleep much, as I can imagine neither of you did either, and we got some shit to talk about. So let's start with a little roll call, baby. What's good? What's good? What's good? Viblet, what's good? Caleb, what is good? DeFi, what's good? XBT, what's good? Malcolm, what is good? Tingled Trader, what is good? Cole, Shifty, Mickley, Houdini Swap, Rectal, Pocket, our resident, Hypebull, Greg, Vita, Jay Byard, King, Dennis, what's good? OX, Bill, what's good? BB, what's good? Wavy, what's good? Lefty, what's good? Zaru, what is good? John, what is good? 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 Chad Michael Burry, if you're watching on YouTube or Twitter and you would like to chat, twitch.tv/threadguy. Ladies and gentlemen, is going to be, I need to change my name to Grab, so I'm going to call it DeFi. It's a good day to be DeFi. All right. I was thinking about this before I got on stream. Yesterday was obviously a crazy day, but the Hyperliquid moment is, I mean, I'll tell you what happened is I got off stream. I was sitting at my computer all day, and then I'm staring at the charts. I'm logging Bitcoin, so I'm just like watching Hyperliquid, the trading platform, not the coin. And I'm like, all right, it's finally time. Like I'm gonna get up from my computer and I'm gonna leave. And so I get my ball, I put my shoes on, I fill up a water bottle, I put my headphones, and I'm just cranking Dirk. I'm cranking just real rap. And I walk to the court. It's probably like 30 minutes from my house, 20 minutes from my house. I walk to the court and I'm crossing the street and I sit down. I get in the court. I open the thing. I sit down. There's this kid in the court. I'm start tying my shoes. He's like, yo, can I use your ball? I'm like, sure. Throw him the rock. I open my phone and I get a ping from TradFi News, who's the quickest every time. It's the fucking best account ever. TradFi. I'll show him real quick. The best account. It's the best news account because he skips the bullshit. TradFi. This guy right here. He skips the bullshit. And I'm telling you, I saw it instantly because I quoted it. I quoted it like in 1 second. Look, tweeted at 3:12. Threadguy quote tweet at 3:12. Like I saw it instantly. 3:12. And Trump, CFTC working to bring Hyperliquid in the United States in a legal fashion. I swear to God, bro. I don't swear to God, but I swear. I fucking cover. I mean, it was like a jaw on the floor moment, bro. Like, I've been in crypto since November 2020. I first bought a Top Shot NFT. And I watched, like, I missed the 2017, but what's good, Ansem? I was here for the entirety of the NFT bull run, into the bear, into ETFs, into Trump winning the election, into AI coins, into Pump Fun, into DATS, into Trump speaking at the fucking Bitcoin conference. Like, I feel like I was here for every euphoric consumer moment, and I swear to you, Trump mentioning Hyperliquid was like a jaw on the floor moment that I don't know. That might be the most euphoric euphoric individual tweet I've ever seen in my entire life. Maybe other than Bitcoin ETFs. I think that would be the other one. If I had to guess, it would be like, I'm trying to think what other euphoric market maker Matt, what's good, bro? I'm trying to think what other euphoric moment passes the Hyperliquid one. It's like Bitcoin ETFs, maybe Trump coin, but like I didn't realize Trump coin was real for like 2 hours. Maybe Trump coin, maybe Bitcoin ETFs, and I don't even know what else really. And so the thing I think is so crazy about it, beyond anything with Hyperliquid, and we're going to obviously talk about it a lot today, is the fact that this cycle, unique to the other two that I've experienced, both of the other two felt like Bitcoin is amazing, and then everything else is going to go up as Bitcoin beta. That is what I have deducted from the last two cycles, at least going into them. It was like Bitcoin is amazing, And then these other coins are a way to get leverage on Bitcoin and like stack more BTC. This cycle coming into it has felt like there was a was it Q1, I guess, when we were talking, like Anson was talking about it a lot. I remember I was DMing with him a lot. We were hyped about Zcash, VVV, and like kind of pump, but it was like Zcash, VVV. I remember we were really excited about, and Hyperliquid. And I remember just like sort of deducting this thought process when I started to get excited about crypto again, that the reason to be excited again is that there's a couple spots in crypto for crypto assets that have uniquely carved out this buyer base in existence that is completely separate from Bitcoin. Like completely separate, stands alone on its own, and has nothing to do with price action of the market. Like that was Zcash. I started to feel this. I'm like, okay, every day there's some new Silicon Valley, like Tech Elite, Bology, then it's Naval, then it's Chamath, then it's like guys that have nothing to do. They don't know what price Bitcoin is. They have no interest in Pump Fund, but they like Zcash. They're really rich. They want privacy. They want to store their money somewhere. They like Zcash. And this is just like exists on its own. And we saw that when it goes on this like crazy price appreciation while Bitcoin's doing nothing, right? And then we saw Hyperliquid do this for the last like 2 years, which is like there is a market and a buyer base and a participant core for Hyperliquid that has nothing to do with Bitcoin, right? Like if you look at this chart, like if we look at Hype, if we look at Hype BTC, right? This thing decoupled like in January 26. January 26, all of a sudden it said, I don't give a fuck about Bitcoin at all. And so Hyperliquid has like built out this buyer base that is like completely agnostic to Bitcoin and the rest of crypto. And we've seen that with like the TradFi adoption, right? We've seen that with like Robinhood taking in Lighter. We've seen that with, you know, guys like Global Flows going all in Hyperliquid. Guys like, you know, Stanley Druckenmiller turns around and buys Per. And Hyperliquid like carves out this niche as it's completely agnostic from all other price action in crypto. And then the one that really got me excited and back in buying coins, which I'm extremely fucking long right now, Pump Fun. Also, send that Jeff edit, please. I want to play that. Send that Jeff edit. I got extremely long Pump Fun because after July 4th, I looked down at Ansem at 450 mil and then Cash Cat at like 150 mil in the same week. And I'm like, wait, what year is it? And I look at Pump Fun and I think to myself, wait. These guys are making $1 million a day, every day in the worst possible crypto conditions. Nothing but like $500 million of Bitcoin ETF outflows every single day. All volumes, DeFi volumes are at all-time lows. Participants all-time lows. Nobody using any platform. And like Pump Fun's making $1 million. This doesn't even make sense. And so if you are OG stream viewer, you know that like I got autistically obsessed with Pump. And I'm like, oh, this thing is just going to exist under the surface no matter what. And then Bink, FOMO, Pump Fun app, all of a sudden Kimchi, and then Ansem market bubble. And then all of a sudden you can feel the animal spirits under the surface. Then you get FWA, you get Stonk Broker, and you're like, oh, yeah. We're going to run this. Like, we're going to run this fucking turbo. And so I got super long Pump. And then what happens is like, we get a Bitcoin catalyst, right? So we have these three forces. Then we have bad news. Price doesn't go down. And you really get Sailor starts drilling support. And we're not going down. We're not going down. And there's supposed to be this mythical, like, guaranteed 50K leg for absolutely no reason. But the guaranteed 50K leg for no reason. Sailor's drilling. Now, to be fair, he didn't sell that hard, but he's selling and nothing's fucking happening. We're not going down. And then, boom, catalyst. Bessing comes out and says, we're controlling the yield curve. Everyone starts freaking out. Inflation, debasement, whatever it was. What was that the reason? Was that the catalyst? Whatever. Boom. You get the moment, and then we're off on coins. At least for this initial pop. We'll see what happens from here. But my thought process on it is like, it has the potential to be the healthiest cycle we've ever seen in crypto, because it's no longer Bitcoin is up, what's the most retarded shit I can buy? If you look at yesterday's price action, it was Bitcoin goes crazy, and then Hyperliquid goes crazy, Lighter goes crazy, Pump Fund goes crazy, Zcash goes crazy, and then ETH goes crazy. And all the coins that have shown that they can exist on their own and have like a real purpose in this universe went nuts. And then everything else, like everything is up, don't get me wrong. But like I look around and I see like Plasma's up 3%, Sui's up 2%, like Aave's up 2%, Grass is up 2%, Tao's up 2%, Farcoin's barely up 1%. Jito I actually like, but like Near is red, Barachain's barely up, PancakeSwap is red, Arbitrum is down 2%. Like all of these coins that mean absolutely, that are just like whatever. Usually Bitcoin goes up and we start buying the most retarded shit ever. Doesn't move. And all of the good stuff pops. And so it makes me feel like, one, really optimistic about it. It's healthy. It feels healthy. ETH was up more than Hyperliquid. One, it's healthy. Two, it's not just being driven by Bitcoin. It's not. It is not just being driven by Bitcoin. Okay, this was like the moment in Bitcoin had its moment in the sun, but look at the Bitcoin pairs. Like let's look at like, we'll go Pump BTC. Look at a couple of these coins, bro. Like Pump BTC. I mean, look at this. Look at Pump BTC. It's going higher right now. It's going higher. I gotta give you credit. You're holding large positions well, calm and collected. Thank you, brother. Look at Pump BTC. This chart is disgusting. Like, look at we'll go like Zach BTC. Look at this chart. Disgusting. I mean, even do I dare say it? Like ETH BTC as well. Look at this. I mean, you could argue this thing put it in like a forever bottom in June, hit a breakout in July, and this is I was wondering what this was. It's the elephant pattern. And oh boy, if you get a breakout of the elephant here, you remember what our target is on the elephant breakout. It's bubble 9. 1, 2, 3, 4, 5. It's bubble 7. Dude, I forgot we had this. Forgot this was on the chart. Bubble 7 is usually our breakout on the elephant pattern. But in all seriousness, like ETH BTC also looks nuts. And so all these Bitcoin pairs look fucking insane. They look insane. And I guess Sol would be the other one. I actually don't even know what Sol looks like. I'm actually not the biggest Sol bull right now because I think it kind of gets its thunder still. I'll give a Sol take. I think Ansem Coin and Pump sort of steal its thunder. I'm going to be honest, but I know he's a bigger Sol bull than I am. Even Sol BTC, bro, looks fucking good. And so this isn't usually my game, like, Bitcoin pairs, whatever. Bitcoin dominance is up a little bit, but my general point is that before Bitcoin has this moment on this debasement Besant pop, the coins are already going. Like, it was already happening. It was, if you were paying attention, which we really were, and we weren't for 6 months, but we were for the last 3 months. It was already happening under the surface. And so I'm kind of like thinking about where I think this heads. And where I think this heads is the stuff that was doing good before is about to do just like retardedly good is what I think. And I look at Pump Fund, bro. Look at the numbers they just put up yesterday. Let me ask you a question. Before I show you the numbers, name one Sol coin that launched yesterday. Name one Sol coin that launched yesterday that went over $1 million. Name one coin if you can. Name one Sol coin that launched yesterday, went over $1 million. I know there's a lot of meme guys in here. One. Can't even do it. Honestly, can't do it. Honestly, cannot do it. Yeah. Moderna cannot even do it. And look what Pump just put up. $1.1 million buyback Yeah, the cancer coin, the vaccine went to what? 1.5, 2 mil. Pump up like $1 million of the fucking coin, 48%. 48%, bro. It went to 3 mil. 3 mil topper. $1 million, bro. 48%. The last time Pump Fund bought back this much money of their coin was, it was definitely in the 100% days. And it would have to be 2 mil plus. 100%. Like, they're doing double what they were doing in April right now, for the record. It would have to be 2 mil. They're buying back half. It was January 31st. January 31st, 2026. Penguin coin went to 120 mil. It was the last time Pump Fund made $2 million in a day. And they did it yesterday. Nothing even happened. Nothing even happened. So like, I look at a chart like Pump, which I mean, at this point, if you track my wallet, it's turned into a monster. I look at this chart and I'm like, okay, wait a second. You're telling me that this thing is up, I don't know, like 200% from the bottom, which was like a month and a half ago. And they're now buying back revenue that they weren't, more than they bought back since January. And then Bitcoin just broke 72K. And you're like, all right, I think some of these things are going to go fucking crazy. And so I'm trying to really hyper focus right now. It gets hard. Yeah, the revenue is also up 200%. Disgusting. I look at something like Pump, and I'm like, okay, wait a second. You're talking if Bitcoin can, I'm gonna tell you a couple things. If we really go right now, even the run to 75, 80, how many users are these like mobile apps gonna get? I mean, they were already doing all-time high. All these apps were hitting all-time high metrics like last month when nothing was happening. There were some on-chain, there were some runners on chain, but like, I mean, we were in hell, brother. We were in hell. The onboarding capability this time is unlike anything I think we've ever seen. And I'm trying to just be objective here with no like euphoria, because let's just like fucking focus. The numbers would be disgusting. I think on this like onboarding topic, Frank made a tweet that I really like. Frank D. Gods early. Let me see. Which tell me if you disagree, but I really agree with this tweet. Something interesting about the new people joining crypto now is they strike me more as early adopters than typical late cycle peak euphoria entrants. Hard to argue with that, right? Anyone that's coming in right now. I mean, I'm not getting calls again from like, you know, my homies. What's up with crypto? It's like the people that are showing up right now are like, they're being filtered from day trading courses to like meme coins on TikTok. I really believe that. And so, theory, part of why retail's never really been here outside of NFTs and small area on solos because cross-chain's been so hard. Now that it's been abstracted, we can legitimately come and trade pretty easily. 100%. I agree with that, like, fully. I agree with that. Another thing is, like, there's a couple forces combining here, which is, Akshay made this tweet. I'm going to show you this tweet, where he talks about the golden era of active investing. You know, when they asked me on the Hasib podcast, what is your biggest belief for the next 10 years? And I said, it's going to be the golden era of active investing. Passive investing relative to active investing is going to be down only. I stole it from Akshay. This is the crypto bull case as well, right? He's like, think of someone starting to invest in an S&P 500 index fund today. Record levels of valuation and concentration. Buying the S&P at valuations like these often meant a decade, zero or negative real returns. It's not a prediction. It's about the risk to reward. And then they see a chart that looks like this. Moderna, after curing cancer, went up 180%. Then they see a chart that looks like this. Do you think young people are just going to keep blindly piling into passive index funds? Then you're retarded. Passive won because it made investing radically easier. Its structural advantage was convenience, not some eternal preference for index construction. Tokenization will do exactly the same thing for active investing. And so it's like the same guy that's about to show up on, you know, Phantom or whatever app to buy the bull on BNB is also going to be able to buy Moderna on the headline that they cured cancer and get the same type of, it's all just going to be, it's all just one. Hyperliquid clears fees on all of it. And the whole thing is just like combining into one. And so I saw that Akshay tweet and I'm like, yeah, so he said, as you saw today with Moderna today, biotech is exactly like crypto. As their equities get tokenized, they will be the new altcoins, giving you back the old days of volatility with weekly up 10x or down 90% type price action. And so, yeah, I don't know. I just look at objectively what's been going on before yesterday. And we've been really excited about on-chain because of all these combining forces. And I think to myself, okay, the one edge you have, I learned this in 2020, but I didn't really know it. And then I learned it again in 2024, is that if you are early to the cycle popping, let's just say we're going to really go on a run. If you're early to the cycle, even if you are not fully positioned and like catch the first 10%, you could sort of see what was going on that right before things got euphoric and everyone forgot everything. And what was going on was like people were fucking hype about on-chain. They were hype about on-chain. Like it was pump, bro. It really was. People were really excited about on-chain, social trading, the meme coin stuff, little DeFi experiments, FWA, stockbrokers. Like that is exactly what was going on. And so it makes me just get a little like tingle of excitement of, yeah, this could get fucking gnarly. So anyways, let's just like watch it because it's so historic. I mean, it was like, bro, it was like the kimchi cycle, dog. It's so historic. We just like obviously have to watch this. It's so historic. Oh fuck. What time is, I might move good Alexander. Anson, what time do you go live on Market Bubble? I might move him back actually. I forgot today's Thursday. I'm gonna move him back. I want to watch the Ansem stream. Yeah. I actually completely forgot today's Thursday. I'm thinking like, when's Ansem gonna get on a fucking podcast? Oh, like 4:30. Maybe I'll do it. All right, I'll figure it out a little bit. I might do it earlier then. Bet. All right, let's watch it. It's so historic, bro.
I understand that Mike is also working to bring Hyperliquid into the United
Why he read it like it's all in all caps?
States in a fully compliant and legal fashion. He's working very hard on that.
Okay, the funniest thing is I've never seen what $1 billion looks like up close until I saw this brother right here, the chairman of the CFTC. Mike Seelig, how do you say his name? Mike Seelig. I have never seen $1 billion up close until I saw this. He cannot even fucking Selig. He cannot even fucking contain it, bro.
I understand that Mike is also working to bring Hyperliquid into the United States in a fully compliant and legal fashion. He's working very hard on that.
The thing about crypto too is you get these announcements and the market is like, take your time on the entry. Like take your time on buying the coins. We'll wait here for you. I mean, you can very clearly see where, like, look at this 5-minute time frame. It's like, take your time on entering. 67 feels like a decent spot. Let me know when you're in and we'll wait a little bit and then we'll get you up to like 73, 74. Take your time, the market. Then we'll just leg it up to 74. I mean, bro, there was a point ETH was up more than hype on the hype announcement. Look at Bold Leonidas. Hold on, let me just make sure. Dude clearly opened a massive long an hour ago. Yeah, it's fucking nuts. This was nuts, and then this is fairly nuts as well.
Mr. President, does the administration have any plans to accumulate sizable amounts of Bitcoin or other crypto?
Well, it's been talked about. I think I'd probably rely on Paul and the whole group for that. He'll make a decision. You guys.
This is a Winklevoss, right?
As well make a decision.
What's good, Kyle?
And you'll let me know. But certainly it's been talked about. It's taken a lot of pressure off the dollar. It's been very, very good for the dollar. And I think if you came in with recommendations, two of you, if you came in with some recommendations, I would certainly listen.
Yeah. So here's a good tweet on it too. I will talk about Rasmer in a second. Also, I want to call this out. We might listen to like 10 minutes of forward guidance, Fade Out podcast, but he's coming on today. But this price action is insane. For my very novice understanding of how macro works and like what just happened, this candle in green is like Scott Besson is in hell right now. Scott Besson is looking at this chart on the 5 minute. He's he's in hell, bro. Correct me if I'm wrong, but he's in complete hell right now watching this. Up 1.1%. It retraced the entire move. He's in hell. Bitcoin about to hit 72. Pump up 13. All right, I want to read this Watkins tweet. It's really, really good tweet about hype. Then I want to talk about Rasmer, and then we're going to LARP his macro speculators. Also, if YouTube, Twitter, whatever, and you want to chat, twitch.tv/threadguy. All right, Ryan Watkins. The first thing I did, by the way, before even thinking about buying hype when I saw the Trump candle was tweet, holy fuck, Ryan Watkins. Because holy fuck, Ryan Watkins. The way everyone thinks about forward estimates in crypto is flawed. He sent this out. He did. This was before the announcement. Industry standard today is to annualize 30-day revenue, which may be fine for getting a run rate number, but inadequate for projecting growth. It's also particularly silly for cyclical businesses, especially in a trough period. Take Hyperliquid as an example. 1. Annualizing 30-day revenue during a cyclical trough in its core crypto markets is silly unless you believe we will never enter a bull market again. Ugh. Annualizing Hyperliquid's 30-day revenue and using it as the foundation for a forward earnings estimate is a short-sighted for a business that's growing exponentially and constantly introducing new business lines. For example, if you analyze revenue at any point in Q2 2025 last year, you would have extrapolated trough volume and you wouldn't have factored in future products, upgrades, and partnerships. This means you would have totally missed things like HIP-3 for priority fees or stablecoin yield sharing, which all went live in the year since and account for the majority of volume and fee growth since. What's good, Surveiller? It's obvious why analyzing 30-day or 90-day revenue is flawed, so why do we do this in crypto? In equities, investors have a combination of management guidance and sell-side research to arrive at forward earnings numbers. These don't exist in our industry, which leaves each investor to think about these numbers for themselves. This is not an easy task, considering it requires making a call on the cycle, factoring new business lines, and projecting out exponential growth. These estimates are bound to have flaws of their own, but this is the point of research and analysis, isn't it? To make a call. I personally think Hyperliquid will scale earnings exponentially over the coming years into the many billions, generating centi-billions in market capitalization for hype. So while hype may be expensive if you're just extrapolating last quarter's earnings, it's cheap if you're thinking about how earnings will scale through 2027 and beyond. So you know what I think about when I read this is obviously Pump Fun as well. Like, obviously, I'm thinking about Pump. Now, here's another thing. Is like, okay, we were talking about the narrative violations for hype. While crypto volumes are basically at all-time lows, they have highest OI since 1010. And the problem with OI to fees ratio is it's all equity perps. And they have growth mode on or whatever, right? So they're making like a tenth of what they should make. I haven't looked at the metrics, but I would imagine their fees from yesterday are genuinely disgusting, if I had to guess. Let's see. Yeah. Look at that thing. Look at that. They did 5.1 million in fees yesterday. 5.1. Look at that. Highest since June. Before that, highest since like February. Before that, highest since November. 4 days higher than that in the last 7 months. What about revenue? Is it the same? Yeah, look at this. 4 million rev, 5 million fees. What happened on June 5th? That's a leg down for Bitcoin? Is that like a Sailor? That was Sailor 32 Bitcoin? Yeah. June 5th, right here. Sailor, Bitcoin. Crazy. Numbers all of a sudden look disgusting. It's so gross. And you mentioned see how profitable the actual traders are, though. I don't entirely know how we would do that. I don't entirely know. Also, the flood. Let's look at a couple. Hyperdash. The flood public wallet is so. Dan the Lorca wallet's on 24. It's short. Oof. Short hype. A lot of hype. But yeah, I mean, what is the other wallet? Because I think he's super long on the other wallet. He's probably up gargantuan at this stage. But yeah, this trade is probably got hunted by Trump himself. Transfer funds this morning to cover. I'm gonna see flood. Flood public wallet. Still in Bitcoin, he is. This Bitcoin long was down like 250K, I think, at one point. It's 500 right now. Cash cut short is still up. I might want to close that. But look at this. This wallet was down 1,000,001 in February. It's now up 2.8, combined 3.1. So generational, man. Shout out to Flood. So inspirational, man. All right. Let's watch this Rasmer clip because he's getting fucking shit on right now. Pretty bad. Also, first, this is just about as lighter as it is hype. Let's actually look at lighter just for a moment. And oh my god. Let's look at lighter. And then we're going to do stock market open, which is in a weird spot. Lighter. Pretty sick day. And look at this. Lighter from the Robinhood announcement is now 59% since July. Lighter chart looks pretty fucking good. Someone owes Jez an apology. I don't know who. Let me see what this Raspberry tweet is. What's this? Ansem explains. Oh, I'll tell you this. The other thing I thought about immediately after Ryan Watkins was I thought about Kyle Samani. That was wild. All right. This is a Rasmer clip from 3 days ago. I'm really long pump, by the way, and I'm really long Bitcoin from like 68, I think. Bitcoin and pump. Pump from 18, if I'm not mistaken. But all right, let's watch this clip. 3 days ago.
Reason is because I held for too long. Reason is because I held for too long. I'm just like, I'm over it. I'm fucking over it. Okay, I feel like I caught a big percentage of the trade. But really the second reason
My wallet's doxed, I just don't post it.
is I can't get this comparison out of my head is we just saw Kalshi and Polymarket, and Polymarket seemed like it was winning for so long. And all of
Shout out Polymarket. We fucking love you. Greatest to ever do it.
a sudden, Kalshi won the regulatory landscape and it was over. And I can't get over the fact that they might not win regulatory. I'm like, what if they're the Polymarket of the situation and Lighter or someone else that we don't know yet is going to be the Kalshi? I just can't get over this, to be honest. And so I'm out. And I don't want this risk of him. Also, Hyperliquid isn't really growing. Like the revenues are like not growing.
This is low-key my fault on the narrative violation thing. I think there's another Raspberry clip I had. Let me see. Let me just check.
Held for too long. I'm just like,
Okay, yeah. Yes, I held for 20 months, by the way. I'm a believer. Yeah, I sold 1 day before Trump's bull post. Wow, LOL. All right, he's getting shit on for this. I'm gonna be completely honest. The Rasmer trade was one of the sickest trades I've seen with hype. He was like one of the only ones in our squad that held it at the size that he held it and told everyone for so long, buy hype, buy hype, buy hype, buy hype, buy hype. And I would hit him back with the like, can't wait for the 1.2x over 6 months on Hyperliquid, like Swanson Benson jokes. Like I was cracking humor about it. I was cracking jokes about it, about the hype thing. And I think he came in here and shared his P&L. It was a monster. It was a complete monster trade. And so I think one, it's just objectively bad luck. Like there's no other way to say that than just bad luck. Like, yeah, you could do some risk management stuff. You sell half, keep 25%, keep a moon bag. But at the end of the day, it's just bad luck. Like, there's nothing else to say. Like, you held it for 20 months. This is part of it. I've done this. Like, this is like you sell a 50K low cap gem and then like POW blast 2%. Like, this is just like, thanks for the gifted. Thanks for the gifted. It's just bad luck. There's nothing else to say. He fucking binked the trade. And he binked the trade. It was kind of an iconic one. Like, I think a lot of people were angry that they had to associate Rasmer with hype because he was so loud about it and was very right. And he fucking binked it. It's bad luck. And I think this is going to be what comes with. This is what comes with trading in public. Is like, sometimes you're just not going to have perfect execution. This is just the way the world works. You're just not going to have perfect execution. You're just not. You're going to sell, then it's going to go really high. You're going to buy, then it's going to go really low. This is just like what is going to happen. And if we're going to like do this trading in public, I mean, this is what comes with it. I'm sure he's like hyped about the views, even though it doesn't feel the best, even though it's like not the nicest commentary of all time. But next trade, like let's fucking play ball here, man. Next trade. So honestly, it was a pretty iconic one for Rasmer. And ball up top, man. Let's go. So, all right, we're going to have stock market open in 7 minutes. This is what we're going to do. I'm going to diverge. We're going to do stock market open for 30, as we always do. Then we're going to bring it back into gear. We're going to talk about debasement, what I like on chain, and then we're going to bring Fejao on. And Fejao on, I think it's going to be like, he's going to really help us make sense of what exactly is going on with this treasury situation. Quick topic update, by the way, on our Mark Walter sports team situation is every team is now like under investigation. He's probably going to lose the Dodgers. He's selling Chelsea, and he sold the Lakers in like a fire sale. And they're saying that a margin call could also force a Phoenix Suns sale. Matt Ashiba borrowed money from JP Morgan to complete the $4 billion purchase. He had to put up $4.6 billion in his company's stock as collateral, but the stock is now down 70% since the deal closed, bro. 70. Think about that. He put up stock collateral in his own stock. What is his company? I don't even know what his company is. It's all these fucking UWM. Not that. UWM. Hair. There you go. Disgusting. Actually disgusting. And so it's gotten to the point where these sports teams, these sports teams are so fucking expensive that they're being bought by funds that don't actually exist. Everyone is just one bad financial moment away from utter disaster. This is probably going to be a new trend. It's like getting margin called on sports teams. And Base just made a tweet about it, which is related. Mark Walter basically showed the private credit Ponzi game is ending. People finally admitting AI doesn't drive productivity or GDP growth. Dario is becoming the most hated man in America, and his last-ditch effort was to claim he could solve cancer. Now, cancer might have just gotten solved, but then we solved cancer without him. U.S. 30-year complete retrace of yield curve control attempt. Teal hiding out in Argentina. Different game developing. Bitcoin is really bad at most things, but there's a couple things it's really good at, and there's a couple moments that it's like very reserved for. And I think there are a very good chance that we have a fun couple months ahead of us. So, all right, stock market opens in 4 minutes. I think it's going to be actually a very important stock market open. I will be back in 30 seconds. When I'm back, we're ripping open, and let's get it. Tulip King, let me know if you heard that tweet I just read, because that feels like it's right up your fucking alley, brother. All right, BRB.
Like back when niggas ain't had nothing, and all these hoes just fucking for fun and no money, and like, now this shit different. Yeah, I'm about to drop the ceiling. Yeah, I'm about to drop my album, I'm about to kill him. Lil' bitch, I say whatever I want, I ain't got no filters. If I bought her ass and titties, then I built her. Yeah, I built her. I been sipping codeine, don't get no fuss about my little payday cut. Pull me up. Rockstar lifestyle, yeah, I been out these drugs. Rockstar lifestyle, yeah, she don't get no fuss. I just flew, yeah, bitch, out to India. I smoke hot red, this ain't no indica. Like a wrestler, I'm about to hit this bitch with my finisher. Fatality, Mortal Kombat, yeah, I'm into her. Pull out track, quarterback, put it on the floor, I need more of that. Yeah, you looking for me, bitch, I'm posted in the cul-de-sac. Yeah, cul-de-sac, yeah, tight shit, pipe shit. Yeah, rock star, that my tight bit. Open your act steady, yeah, tight shit. BBS diamonds on my right wrist and my left. Carrots in my inner, I can't hit shit, yeah, I'm deaf. You can ask my partners, I been popping shit since I was 12. I got pounds by the land, ayy, keep your eyes on the mill. Okay, cause I'm bigger than the law, ain't going back to jail. Yeah, fuck 12, yeah. I ain't leaving no evidence cause the stick came with a shell catcher. And my partner flip your shit, then I'm paying that little bill, yeah. She took off all her clothes cause she say it's hot as hell in here. Balenciaga, steroid boots, I can step on the whole town. If you talking down, I get you spent right now.
All right, let's get it. Let's fucking get it exact time. Dude, I spilled my coffee. Sorry, I had to like clean it up. It was fucking everywhere. All right. You ever feel unk, bro? Yeah, man, I'm fucking 24, man. I'm pushing it. Where are we at before we open? 71.8 on BTC, pump up 14%. DRAM in the pre's up 2. Mags are red. And the Qs are not looking good. All right. The stock market opens in 30 seconds. It's always stock market open is powered by Phantom. It's powered by Phantom because anything you see in this segment, any stock, any coin, any stable, any perp, anything related to the market that you want to trade, if you could trade it, you could trade it on Phantom. Guys, things are getting interesting. There are months where nothing happens, and there's days where everything happens. Today might be one of those days. And on that note, the stock market is officially open. Let's go. If you're watching on YouTube or Twitter, by the way, and you'd like to chat, hella people on YouTube, twitch.tv/threadguy. Let's go. The SPX officially opens red, down 0.32%, 7,681. Let's look at high time frame SPX real quick. Chill, trading view. Not great. Not great. That's down 0.34. Cost fee on yesterday's trading session, that was up 6%. The Dow is down 0.7 and getting crushed. NeoCloud ETF is down 0.7. Photonics ETF is up 0.8. The NASDAQ 100 is down 1% and not great. Qs are down 0.5. IBB is down 1.4. The Soxel flips red, down 1%. IGV is down 0.1. Mags are down 0.5. And DRAM is down DRAM is up 2.5%. All right, Bitcoin 71.6. We're right on the open. Pump is just, it's up 14% today. ETH is still up 1%. Hype 71.4. Silver is flat. Solana is 86.5. Stretch is 95.8. It's getting ready to fucking repeg. I don't know if that's priced in. Yields are soaring. 30 years up 1.1. 10 years up 1.4. And the 2 years up 1%. The VIX is up 5. 555. VVV is down 1.5. Gold is down 1.5, which is crazy. Gold is red during all this. Copper down 1.2. Monero down 1. And Zcash down 1. Man, look at Brent. High time frames up 2.5. Look at the daily on Brent. Look at the daily on Brent, dude. Up 2.6. Crude is up 2.4. Look at the daily on fucking Brent oil, brother. We'll get to Walmart in a minute. Actually, we'll just look at Walmart. They missed earnings, right? Revised earnings down for the first time in like 6 years. Look at this. Scott is in fucking hell. You know why else Scott is in hell? I'll tell you something real quick. Pause for market open. I have learned, it's been brought to my attention, that the easiest way to get yields down is to stop inflation, which is to end the fucking war in Iran. Okay? And if they just ended the war in Iran, they could have gotten away without this bond printing situation. Okay? It would have gotten Besson out of hell if they ended the war in Iran. Okay? Instead of ending the war in Iran, they've taken this like drastic measure to issue quantitative easing while the SPX is at all-time highs. And that means one thing and one thing only, which we clocked in month 1 of the war without having any fucking idea what's going on, which is that they cannot end the war. They cannot end it. And so Trump, what I didn't understand, because we never really like paid that much attention to treasuries, is that Trump has been able to manipulate the oil market specifically. Okay? He's been able to manipulate oil, keep Brent down, keep crude down. But the bond traders are not buying it at all. And so they've artificially kept oil down, which gets rid of pain in the short term. But in the back end, this thing is brewing. And if he could stop it and end it, he would. Also, what's the dollar doing right now? Getting crushed. But 71.5 on Bitcoin, pumps up 13. All right, big semis, big AI, everything in between. Let's go. SK Hynix ADR, that is up 5%. Marvell's up 2%. On news that Google is buying 6% of the supply. QCOM's up 1.5. AMD is up 1. Apple's up 1. Broadcom's up 1. Micron's up 0.5. Let's check on the 0.5 in green on the open. SanDisk up 0.5. NVIDIA up 0.2. Oracle flat. Meta down 0.2. Microsoft down 0.5. Google down 0.6. Amazon down 1.2. Cerebras down 2. This chart starts to look kind of ugly here for Cerebras. A lot of red days in a row. Shaw's down 1.5. Fuck this coin. Intel high time frame is disgusting. Look at this. Semiconductors are in trouble. Look at this Intel. It couldn't even get a real shoulder here. Intel looks horrible. Redwire down 2.5. Tesla down 2. Rocket Lab down 2.5. SpaceX is about to re-lose 135. G-Man, what's good? Look at this SpaceX chart. About to re-lose 135. RoboStrategy down 3.5. Bloom down 2.5. Let's check back in. DRAM still up 2.5. Max down 0.5. Soxel flips green. IBB getting wrecked. Q's down 0.5. SPY down 0.3. All right, some of our consumer names, crypto stocks, and everything in between. MSTR is 110, but kind of getting cooked on the open, up 6. Coinbase is up 5. Circle is up 2. It was 86 in the pre. It's now 80. Damn, everything's kind of getting cooked. Hims is up 2. Figma's up 1. Hood's up 1.5. Disney's up 1. eBay's up 1. IBKR is up 1. StubHub's up 0.5. Wow, 6.9. I bought my mom and I bought tickets yesterday for her birthday for an event, and I didn't let her use StubHub. We canceled out of that shit. It was awesome. Take 2 down 0.3. Race down 0.2. AMC up 1. Airbnb down 1. What else? Shopify down 1. Eli Lilly down 1.3. What does Lilly look like high time frame? I mean, it just made an all-time high. It looks great. Nike down 1.5. How's it even possible? Nebius down 2. Reddit down 2. Huh. What about biology? mRNA. It's down 16% right now. This is such a ridiculous chart. I just checked Disney. Where's the money going right now? It's just going to oil. Bitcoin 71.4. Where's it all going? ETH hype, Sol. It's just buying. It's like dollar down to. Where's it all going? Zcash red. Gold red. Everything's red. Except for, I guess, memory. SK Hynix is up 5 now. SanDisk up 2. Yeah, memory's kind of doing a little rippy here. SK Hynix is SanDisk is now up 2.5. Micron's up 1.5. 950. Orvel up 3. Let's check on chain. How is Japan? Let's see. Not good. USD JPY. Not good. It's about to reclaim the 160 level. This is the Besant candle right here. I think that's the Besant candle. Yeah, like this. So it started like here. 159. Oh, IBIT. Yeah, good call. IBIT. Wow. It's up 4%. I guess it's just gonna mirror. It just mirrors Bitcoin, right? It's just like it literally is Bitcoin. Bitcoin kind of getting wrecked in the open too. Not too great, but we'll see how this shakes out. Let's check on chain. All right, what do we got? The boomers been buying our coins. Yeah, they have been. The bull is going crazy. Oh, here's another insight I had yesterday. Is like, yesterday coins go crazy, and nothing on chain moves at all. Like zero movement from any on chain coins. While Bitcoin and Hype and all these things are going nuts. So my extrapolation from that is this was all just new money. It's all like new TradFi money buying. It isn't crypto people like unstabling and buying. It's like new money coming in, right? Because nothing moved yesterday at all. It wasn't like there was this melt up of coins. It was only select few were going crazy. That to me feels like it's all new money coming in to buy. There's no other real way to break that down. If anyone else has a different theory, I'd be curious. But the bull went nuts. This thing is at 60 mil. Cards is 78 and actually looks pretty fucking good. The GTA coin 1.2, FWA 20, a lot of short licks. Yeah, for sure. I saw a couple like $25 million ETH positions get licked. Ansem 250. This looks good now. These positions were only on majors, not on chain coins. Yeah, got it. Cards found a leak that Phantom integration soon. I did not see that. Pawns 28. Toad, this thing is pretty fucking dead. Cash Cat 123. This would print a crazy chart if it went higher. It would be printing a crazy chart. Pipe Dog, I guess. 30. And Stockbroker. Ew. Oof. That's not great. I guess Tendies, the other one. 13 mil. Yeah, I don't really like that coin. And then let's take a quick look at who I have tracked here. I guess the other one is Jazz. We've been tracking. No, none of his wallets are active on here. We just have Loracle, which only has a pump short on this wallet. I don't know about his other wallets. He called me a retard the other day, and so I'm going to chill on the Loracle commentary because it scared me a little bit. I'm not going to lie. It scared me a little bit, dude. It scared me a little bit. All right, check back in. DRAM plus 3.4. Neat and Troll. I'll look at those fine. That looks pretty fucking good. Should be Loracle's second wallet. Thank you. Search anything. Traders. Only one. Oh, account value 61 mil. Holy fuck. Where's all the size? Holy shit. $61 million in this account? My God. That is unbelievable. All right, check back in. DRAM up 3.8. So memory is getting bid pretty hard. Mags are staying red. We are now 11 minutes into open. We got to cover like 30. Trading psychology reminder. I'll get there after open. Let's get to open first. IGV very red. Soxel flips green. Nasdaq though is down 0.7. Dow down 0.7. Stowe had a good tweet about equity longs being good here. Let's see. Stoic Savage. That low is low of the day for clear lockout upside and end of week. Sub 71K, then late longs get hunted. Interesting. He's funny. I have him on noties, but I had to like get him off my feed for a minute. Wait. There's no one using liquid shitcoins is when you top lots of shit out liquid majors with size. ETH candle. Let's see. All right, so we were at Dow's still red. Now's down 0.7. SPY is going green, still down 0.15. Q's down 0.3. IBB is getting crushed. I wonder, like, let me ask ChatGPT, like, what are other bio stocks? Like, what are the public bio stocks closest related to mRNA? That would be alpha or beta. Like, what else would get the pump? Like Moderna. I have a whole bio section today. I kind of want to get through it. Damn, I got this thing on high throughput. I was using Instant and it was good too. It was really good. Let's check it though, regardless. mRNA. Moderna. Damn, it's at 17%. Yeah, 144. It's crazy how quickly this got added to HL, by the way. He added it. Choco added it yesterday, bro. Look at this. And gave you time to ape. Like, you got 45% or up on HL is insane. It's like unfathomable how fast that is. All right, BNTX, number one direct alpha. Let's move this over here. I just want to look at some of these bio stocks. BNTX, Biotech SE is down 5. ARCT, High Beta, Moderna. That's up like 2. You know who's unfortunately crushed the bio trade is Crypto Condom, bro. Tulip King was right about this. He has. MRK is another one. Merrick. This is up 1. Damn, look at the pump this thing got. Crypto Condom has unfortunately really crushed this. Wow. Look at this fucking chart. MERCK. What is this? They were involved in the vaccine, in the cancer. Holy fuck, this stock looks insane. What's it worth? $368 billion. I've never even heard of this. $368 billion is nuts. All right, chat. It's about that time. It is about that time. As I look around, we are 15 minutes into open. We have to do 15 more minutes. As always, so we say tapped in, but you already know what I want to know. What are you buying? What are you selling? What do you like? What do you hate? What do you want to enter? What do you want to exit? What did you take a loss on? What did you take a W on? What are you in profit on? What are you losing on? Down 120K on Mars coin. Oh, long pump. Dog, look at fucking pump. And some pump barbell. That's a fun one. Long hype spot till 777. Jesus. Literally doing nothing, just smiling. Holding Lily in IAU. What is IAU? Oh, gold. Link is crazy. Is it? Dude, look at pump. It's the, yeah, gold. Why do you hold this specifically, IAU? Launchpad Supercycle, Hike and Ponds, Rolls Royce. How's that doing? Is anyone buying semiconductors here? Ugh. Is anyone buying semis here? Slam cards heavy as fuck. 12 30-day revenue on DeFi Llama. Joe Coin, long copper. Holding Ansem and NFT projects related to Ansem. That's a sick barbell. Honestly, it is. Pump looks insane. It looks disgusting, bro. It's just going for it. It's just fucking going for it, bro. It's up 16% on the day. Looking at NeoCloud, Nebius long soon. I like the NeoClouds. Pump hype in the bull Bitcoin barbell. And hype long since 45. Bought per. Wait, let's look at cards, actually, because I like that coin. I know Anson likes that coin, too. I want to like this coin so much. I really do. Cards. Holding OKTA. I don't know what that is. OKTA. Okta. Technology services. What do they do? Identity management platform for enterprises. I don't know what that means. That's nuclear. Pit network, quant network. What is Link doing? Whoa. Wait, what big company is using Chainlink? Is it Robinhood? Chainlink? Yeah. Do they make money on this or no? Like, I wonder, do they make money on... As the Link Marine since 2019, this thing will never go up. Do they make money? Everyone uses Link, but it never pumps. Revenue? Oh, Sergey was at the Trump thing yesterday. Didn't he speak? Didn't he speak yesterday? Wow. DeFi Llama sells for revenue. What do you got? Cards. Wait, where's cards? Collector crypt. Fees. Yeah, it does look pretty good. What about like DEX volume? Revenue. Yeah, it does look pretty good. I'm not gonna lie. Huh? Chainlink is trading at like 50x revenue or something silly. Jeez, is it that bad? I've never really paid attention to Chainlink at all. Let's look real quick. Chainlink. Did he say anything interesting? Let's watch real quick. He was gonna come on stream. What happened?
Want to say that what Chairman Selig and Chairman Atkins are doing and the president has enabled with his leadership is actually working. So if you look at stablecoin usage and adoption, it's increasing the usage and distribution of the US dollar at higher and higher levels than our industry has ever seen, specifically because of the Genius Act.
Bro went for the Khabib look. It's crazy.
And the movement of more and more treasuries into stablecoins and therefore into more and more hands across the world. And now the tokenization of equities, thanks to Chairman Selig's and Chairman Atkins' great work and collaboration and actual work together rather than working against each other as before, is going to distribute U.S. equities globally and increase the distribution of those.
So it's what? Link, CFTC chairman, Winklevoss, other Winklevoss. Is that Paulo? Who is that? Who is that?
So, we power a lot of these applications.
No, right? No. It kind of looks like him, though.
And companies, so we know what the numbers actually are, and they're massively increasing because we have regulators and leadership that enables the success and distribution of these U.S.-based assets. So there's actually a very real and tangible outcome that's really now benefiting the U.S. and adoption of U.S. issued assets and the U.S. dollar. So I just want to mention that it really is working and hitting all-time highs. So
the only thing I don't understand on this stablecoin discussion is like, why does this chart not go up ever? How does this not? Tulip's favorite chart. Why can this not go up? I don't understand. Like, what is the deal with this chart? It's like so omega cucked. Stablecoin, total stablecoin market cap is like, it does not go up. The thing about Chainlink is that it'll be the price token for every RWA in the future. I don't understand the stablecoin thing. Is it just a psyop? 30 days, it's down. You're telling me stablecoins on chain, it's down in the last 30 days, is what you're telling me. It's crazy. It's up 2x in the last year, I know, but it's down from like, it hit all-time high in May, and it's down since May. It's great. Tulip, you tweeted about this, right? If I could long the fuck out of this chart into the bull run, I would. Yeah, how do you long this? I think you just long Bitcoin. I think Tulip had a tweet about it that was pretty good. Wait, one of the more interesting problem spaces is after they have to repurpose the data centers from AI to crypto, which assets will benefit? Not fully sure, but have some mildly related venture bets. Is he trolling? It has to be a joke, right? Dog, what? All right, let me see. That's such a good one. One more thing. Maybe stablecoins are fundamentally low supply. TradFi Cash takes days to settle, but tokens settle instantly. This is actually a good tweet. So the theoretical increase in dollar velocity on chain is technically infinity compared to TradFi. Maybe the on-chain economy just needs less dollars in circulation because those dollars could be in so many places at once. It's a good tweet. I hadn't really heard it before. The take. Let me see basics. Also, Luke Jones, can you send me the can you send every single person you know starting a fund? You think we're getting 5% GDP growth? Can you send me the Zoom for Fei Zhao? Yeah, thank you. Let me see a photo real quick. Notice that the universe gave the OG perpetrators $1 billion in paid after the Zoomers called us plumbers. I'll tell you, you know what's one of the sickest? I think it's too early to say who like who called the bottom. Obviously, the Ansem one is like generational. You know who has a sneaky one? Is the fucking Giver, bro. Giver has a sneaky one, dude. He was gone for 3 months. The entire timeline was doing well. I'm in group chats with like Chumba and these guys, and they're like genuinely concerned. Like, has anyone heard from Giver? It's unlike him to do this. They're on the TL. Like, hate to bring this to TL. If anyone knows Giver, like, please reach out. He shows back up, says, "What did I miss?" Basically, his first tweet back is something on the lines of, if Doc Rivers can make the Hall of Fame, then Bitcoin can go up. And then the next day it has its best daily candle in like a year. Also, as I'm talking, it's just like hard for me to focus right now, I'm going to be honest, with this is going on. I just like have so much money in this coin. It's just like, I don't want to get like euphoric about it, but the thing about Pump is that I just cannot do anything but smile when I think about how much. This is a weird stream because it's like I have an agenda, but we're just freestyling. The thing about the Pump coin is how much money they can make. Doesn't even make sense. It's like a number that is, it's a number that is like so outrageously outlandish. I just think like, man, imagine if Pump had a liquid token during November 24. Hype as well for what's gonna come with how much money they can make. Imagine Pump had a liquid token during like Cerebro. Does it go back how much they were making those days? Can DeFi Llama show what they were making? And nobody was even on chain. It was like wizardry to be on chain. Like it was not like the normal thing to be like, oh, I'm trading memes. It was like, oh my damn, my computer just got so slow. Let me see. Revenue or fees, I guess. Revenue. Yeah, I don't even know. The numbers are low here, but I don't know if that's like accurate or if that's just like not that many people were trading or what exactly. But I mean, look at this fucking coin. It's up 18% today. When's the last time we saw 18% candles on on-chain on alts? 18%. ETH had a 20% day. I mean, the other thing about Pump too is Jesus fucking God. The first, oh my Lord. By the way, it's trading like the funds have decided that we need to own this coin. That's how it's, to me, that's how it's trading. I was looking at when Zcash, remember we were watching Zach on stream when I was super long, and then I think it was the Winklevoss that started twapping it, and you're like, what the fuck are these candles? Like, who is buying this coin, and how much fucking money do they have? And it was just like gapping $50. It feels like funds are buying these coins. Also, you know who deserves some respect in the liquid fund side is this guy. I don't know who this is. I don't really know who this is. Fuck, Austin. Fuck, what's his name? This guy, yes, Austin Pump. It worked. Founder and managing partner at Relayer Capital. Thesis-driven crypto investment fund. This guy fucking binks shit. You had him on? Did you have him on stream? I'm gonna have to watch that. Let me see. I think you might have had him on stream. That was a binker, man. Dude, it's up 20 fucking % today. Oh my God. Looks identical to Zoran Cole. Tiber's mooning also. Is it? I know some people that are a fucking ton of this coin. Okay. What is mooning? Tiber. Wow. Look at XRP. Seriously, we're doing that right now. XRP. Market cap. Whoa. I mean, come on. Not really. It's doing a whole lot of fucking nothing. The one that's surprising a little bit right now with how hard it's pumping is Monet was going crazy too. His biggest gainer. Pump overtook it, but that's biggest gainer. All right. Quick couple stock things. Number one is announcement on OpenAI IPO, which, okay, so we know that Anthropic is coming maybe in the next 2 weeks, 3 weeks. They're saying, I mean, Polymarket says 80-something% chance by December. I forget that it's fucking August right now. It's coming like really soon. And THROPIC, Anthropic IPO by, it's got a good amount of volume too. They're saying 10% by September, 50 coin flip by October 15th, 74% by October 31st. So it feels like October. And then 87% chance by December. So we know this is coming ASAP, and it's coming at a really weird time for the market. Also, we're going to have Good Alexander on second stream today. I'm going to try to move it before Ansems. And the last time he came on, it was to talk about the SpaceX top in the trifecta of IPOs. It was pre-SpaceX. And so was that the top? I don't know. Line's relatively close. We had a sick pump on SpaceX first, and that was such a lit trade, but I round tripped the whole thing. I round trip the whole thing, but we're now gonna get both relatively soon. So Anthropic's coming out the gates pretty soon, and then announcement was OpenAI will be public in 2027 or sooner. Sarah Fryer is telling employees the IPO is coming 2027 or sooner, likely to help improve retention. And at the same time, we get this Stripe. Oh, let me text Fei Zhao. Luke. Okay, Fei Zhao 45. At the same time, we get this announcement for this letter from Stripe. They leaked this letter to investors. The singularity. It's fuzzy. It's a fuzzy and perhaps already overworked term, but we decided that January 1st marked the beginning of the singularity. And we have since been operating on that basis. The singularity is often invoked alongside millenarian forecasts. But in our case, we simply saw a large inflection in long-run trends. For example, a huge increase in the rate of new firm creation. And we decided that we ought to take that phase change seriously. Kind of a crazy announcement, or like a crazy letter. If you look hard enough, there's narrative violations all over the fucking place as it relates to the singularity, where it's like, people are not getting fired, headcount is growing, revenues are not going up. Like, it isn't exactly this generational, all of our problems are now solved type of situation, but I don't know. I would imagine Stripe is closer to it than I am. So when you see Stripe say it, it's like, all right, fuck it. Also, check the Giver wallet. I linked you. He's in flow state and caught Monad at like midday yesterday. Send me that. 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 Bitcoin's 71.6 right now. God, the pump chart is so gross. What is my Twitter timeline doing? Send me the Giver wallet. I want to look at that. Let me see if there's any good tweets. Here, thanks. It's a singularity buyer payment processor. Show us your wallet on Hyper, brother. It's low-key public. You're saying this is Giver. Wow, he's banking shit. It's up 560K. Not bad. Long gold, long Bitcoin, 40x long on Bitcoin. 5K margin though. Long Hype, long Sol, long Monad, long Cashcat, long Lighter, long Athena, and long Chainlink. Check my wallet. Let me see. Hyperdash is so good, bro. Okay, I thought this was me in my wallet. This algorithm is actually yours? No. No. Check Jaz's latest tweet. All right, let's see. I think Sol is a Cardano of this cycle. All right, here's my take on Sol. I actually have a take on Sol. I'll give you a take on Sol. Because I fucking love Solana. I love Solana. I think the coin is in a weird spot though. The problem with the coin is that it has the most competition it's ever had from a speculative premium perspective. And oh my God, hold on. Dude, this is so gross. I'm sorry. I'm sorry. It's so gross. It's so gross. Here's my thing on Solana. It's like, okay. Solana had basically back-to-back the craziest runs of all time. I think it finds itself in a weird spot right now from a token premium like speculation standpoint, with the most competition it's ever had being Pump Fund and Ansem Coin. It really has. Like, I think a lot of the on-chain crowd that would just close their eyes and buy Sol or try to stack Sol are going to think to themselves, like, let's just buy Ansem Coin. Because the reflexivity potential for that is just on a different level. And then a lot of the VC sophisticated crowd that would buy Sol would look at Pump and say, let's buy Pump instead. And so I think it finds itself in a weird spot there. And the other angle of it with Solana is that depending on how big these chain agnostic social trading platforms get, settling in USDC versus Sol, I think matters. I really think that matters. You sort of abstract the chain away a little bit, which has been a challenge for crypto forever. No one had really been able to do it. And you get rid, you have abstract Sol in the chain gone completely, settle in USDC, and then it's like, fuck. It puts it in a little bit of a weird spot. So they definitely have some hurdles to overcome here. From this, from speculative coin premium. That was true per on hype would be so much higher. They're not actively running per on hype. Ansem is actively running Ansem on Sol. And how much of Sol is Ansem? You know, you got to ask yourself this. Also, this is disgusting. 21% green daily. You see any realistic catalyst for ETH, like liquidity crunch? I've been trying to convince myself I like ETH. It's just like so expensive, man. It's so expensive. Any quick summary on why Walmart is down? Yes, thank you. We could do topics today. Liquid crunch is kind of coat. So Walmart posted their weakest sales growth in over 6 years. They reported smallest sales gain in more than 6 years as some Americans continue to spend cautiously, especially when shopping at the realtors' physical stores. Quick note, travel is up. Walmart revenue is down. Travel being up, by the way, from what I'm reading, is it's complete luxury travel. Like, luxury travel is thriving right now. Everything else is hollow. Walmart sales are down. It's kind of very K, right? Like, that's like K shape. That's what that feels like, bro. On Thursday, Walmart says U.S. comparable sales, those from store and digital channels operating for the last 12 months, rose 2.6%. That is the smallest quarterly increase the realtor has reported since 2020. The number was hurt by new pharmacy pricing regulations, without which Walmart would have had a 3.4% lift, the company said. That's below the analyst estimates of a 3.8% gain. Stock opened 8% lower. Much of the growth came from a 24% increase in U.S. e-commerce sales, a figure that includes Walmart's increasingly prominent advertising revenue business. Walmart also lowered some prices in the quarter, using some of the windfall of its $2.9 billion in tariff refunds. Prices during the quarter were still slightly higher than the same period last year due to overall cost increases. Didn't they didn't Trump tell Walmart to lower prices? Didn't this happen? Do you remember this? Like, Trump asked Walmart to raise prices or to lower prices. Here. Great news. I've just been informed that one of the biggest, best, and smartest retailers in America, Walmart, will be lowering prices by a lot. And my administration's request to celebrate our great country's 250th birthday. Walmart will, in particular, be dropping the price for a pound of ground beef by almost 15% among many other products. This is a huge deal for the many millions of Americans who smartly shop at Walmart, which is a truly patriotic company who loves the USA. My administration is lowering prices that Joe Biden incompetently raised with the worst inflation crisis in history. A total disaster along with the southern border that bought... Dude, what the fuck is this post? A total disaster along with the southern border, the botched withdrawal from Afghanistan, and many other failures. Dude. Just as I promised, oil prices are plummeting fast and gas prices at the pump are dropping too, just like egg and prescription drug prices, which I'm bringing down by historic levels. Walmart is stepping up in a big and bold way, and other realtors should follow the lead of these absolute patriots. Together, we'll make America stronger and greater than ever before. Yeah, well, maybe it's the lower prices is the difference, or people just are struggling, but wow. This thing is printing a fucking chart, man. All right, where are we at? WMT, Walmart. Oh, God. Oh, my Lord. Wait, what is the timestamp on that Trump tweet? July 6th. Wait, Tulip King, what did you say? Tulip King. Oh, Lipcorn's just cope. July 6th. It was on a weekend. It was like right here. I don't have an answer. I don't agree that pump relies on sold price at all, by the way. I don't think it relies on sold price at all. I mean, look at this. Look at this fucking chart, man. This thing does not care about sold price at all. Zero. They sell Sol. Yeah, it's the pump fund business model is selling Solana. That's what they do. That's the pump fund business model, is selling Sol. That's literally how they make money. I mean, that's literally how they make money, selling Sol. They actually sell vaporware versions of Sol. It's up 19. Hype looks great. Bitcoin looks great. Any like alts that I've missed that are going nuts right now? How's Near? Terrible. How is it red? Near is red. Venice is red. I actually think Venice looks good, but I have to ask myself, like, what is to make of the token equity problem? Because I really like Venice, and it's a fucking monster. And I think Eric Voorhees is really smart. They just passed 4 million users and 100 million ARR. It's gross. The majority of free cash flow has been directed to token burns, and the team has been explicit about that continuing to be the case. The product is world class. Case in point, 4 million users and continuous double-digit month-over-month growth. The company balance sheet is the largest holder of the token. Second largest holder is the founder, Eric Voorhees. Third largest is the executive team. In Eric's own words, some revenues have begun flowing to the token. Zero revenue has flowed to equity. Equity is the largest holder of the token, and benefiting the token is one of the highest leveraged things that equity can do to serve its own interest. Outside investors own less than 9% of the company, and all have strong incentive in the token's upside, all with multi-year lockups. OpenRouter, which is valued at $7 billion in its acquisition by Stripe. In my opinion, that Venice token is materially underpriced at 1 billion FTV. Not financial advice. But here you go. This is the problem. The biggest thing that jumps out in that Venice projections is the disconnect between revenue growth and burns. Revenue grows 3.15x from 107 million to 337 million. VVV burns grow 8x from 8 million to 70 million. Tulip can make a video. Yeah. Congrats to the Venice equity holders. VVV would be a no-brainer bid if there wasn't a token equity dual structure, but unfortunately there is one. VVV is only buying back and burning 7 million a year worth of tokens against a 700 million market cap and 40 million annual emissions. This is the problem with the coin. These fucking token equity splits are so bad. Also, if you're on YouTube, Twitter, whatever you want to chat, Twitch TV threadguy, they're so bad. It's like a complete just cuckery of some of these altcoins, man. It really is. All right, here's what we're gonna do. I know we're a little bit all over the place today. I want to refocus, and I basically want to watch. The first, I don't know, 20 minutes of Fei Zhao's forward guidance and talk and learn about why what happened yesterday is so important for Bitcoin, why we popped, get a little knowledgeable, and then he's gonna hop on. And it's gonna be fucking great, man. It's gonna be great. It's gonna be a really good episode. So I'm gonna get up one more time. I'll be right back. When I get back, we're gonna watch some of the forward guidance, get some great clips out, and then we are going to have my dear friend and macro specialist on. BRB. Playlist. Yeah, many are asking for that playlist, huh? Yeah, god damn. I saw a post. Pump generated over 2 million in revenue yesterday. At current prices, 1 million in daily buybacks would repurchase roughly 20% of circulating supply annually, already outpacing annual unlocks. What's crazy too is they've had 2 big unlocks very recently. They just fucking gobbled it, I guess. Link it. Let's check SpaceX. Who said, oh my god, SpaceX? Also, where's that market even at? DRM still up 3. Ooh, god. Soxel goes red. Q's really red. NASDAQ down 1.1. A lot of shares in X are acting like too good to be bullish. Crypto. Pages of guys that influence you, and a lot of people haven't made money in this move or lost money on. I think we just fucking trade the charts in front of us, man. Like, and crypto seems to be a really good spot right now. Soxel flat. IBB's down 2. What does that mean for Eli Lilly is where? Lilly 1.4. Soxel flat. IGV down 1. DRM still up 4. The SPY's down 0.3. I'm extremely keen to know what happens to ETF inflows today. It feels like a really big day for ETF inflows. I cannot lie. I believe they were the high. I made a tweet about this actually. ETF inflows yesterday were the highest since May 4th, 2026. We were at 82K on May 4th, 2026. We were at 82K. Highest since then, which is pretty wild. I can't lie. Bitcoin 715. Pump up 17.5. Hype 74. This thing is so gross. Yeah, 2 out of the last 3 days. They've just been green, good green. 30-year chilled out a little bit. And then Zcash. I think Zcash is one of the best high time frame charts as well. All right, let's talk about the fucking debasement situation. So, Treasury Secretary Scott Bessent announced that it will buy more long-term treasuries, 30-year, which I guess nobody wants the 30-year anymore. And we just look at the 10-year, because how could you think 30? How could you even conceptualize 30 years out as it relates to the American economy? 30 years, bro. I'll be 54. There's no possible way for me to think that far ahead. Even the 10-year feels nuts. Even the 2-year feels nuts. But Treasury has announced that it will buy more long-term treasuries. Private investors no longer want to hold to try and keep yields from rising. The money to pay for it will ultimately be created by the Fed, sending inflation soaring. And so my understanding of what just happened is that 30 years getting really expensive. Really, really, really expensive. And they need to keep it down. And so Besson comes out and they have this like system where they're buying back, I don't know, like $2 billion of the 30-year per like tranche, which is kind of nothing. I think during COVID, I mean, they bought like trillions of dollars. That's where all the money printing was going. And they drew the line in the sand and said, this spot, give or take, on the 30-year is, this is like our line, like right here. And also, I'm such a macro noob, but I'm doing my best. This is our line in the sand on the 30-year. And if it goes above, like, we will let the market decide and price it on its, in its free market way. Unless it gets this high, then we will step in and we will make a play. And so the step in, make a play was that they said they're willing to increase the cap per like purchase from 2 billion to 4 billion, which is basically nothing to nothing in the grand scheme of like controlling bond prices. But from what I've read, it's not the fact that it's $4 billion. Like, the notional dollar amount does not really matter. It is the idea that they are willing to increase it, which basically means they will do, like, Besson basically said, I will not let the market go higher than this. Come call my bluff. And what he's saying is that, we are willing to increase the cap as much as we need to hold this line. Okay. And in doing so, he is going to force us to print. And so this hits, this announcement hits. And apparently Yellen was doing this as well, and Besson used to shit on Yellen. And so everyone's like, okay, Besson knows what he's doing. He's potentially about to inflate the fuck out of USD. He makes this announcement. They increase it to 4 billion. And then everyone at the same time is like, oh my God, it's go time. It's go time. And gold goes crazy. Bitcoin goes crazy. Hard assets go crazy. And so I said at the beginning, but the thing that I learned that I think is the craziest, the impacts of treasury buybacks are often overstated, but they signal here's the best in Yellen. Everyone when it comes to power banks, they encounter fiscal change. Doesn't matter what they said before. The thing that I learned was like, no, we have phage out. We're good in 20 minutes. The thing that I learned was like, if they really wanted to get the 30-year down, the easiest way to do it would be calm inflation, would be to get oil down, would be to end the fucking war. And the cleanest lever to do this, way cleaner than printing infinite money to buy garbage, is to end the war. So if Trump could end the war, he would end the war. But the war is not ending. This Iran situation. Like, we have absolutely no control in Iran. That war is not ending. And it would solve, I think it would solve a lot of our problems if they just ended the war. And so you look at this chart that I am pretty new at looking at, and you see like a Besson's line in the sand on the 30-year is right here. And so it's like right here, announcement comes out, it gets destroyed, comes up a little, destroyed, and then now we're coming back up, and we're basically at the exact price at which Besson made this announcement, like completely just shook it off. And so then you're looking at the situation and thinking to yourself, oh my God, this could spiral out really fucking control. And so I had like a Jez tweet. Dude, if it's the fucking soul tweet, man. Dude, I'm just not willing to sell my pump for a very high price. They're gonna watch and look back on some of these rants that we did on stream and be like, whoa. Where's Chad Michael Burry? I'm a great idea. I've always said this, man. I think I'm like the best ideas guy in the world. But my execution is bad. But the thing about execution being bad is that unlike ideas, unlike being retarded, you can fix it. It's a lot harder to fix I have no good ideas into I now have good ideas. That's hard. I mean, that is like, we're talking, real developmental work. That is not an easy thing to solve, really. It's not. But the execution part is like, yeah, that could potentially be fixed. Let me just show this real quick, and then we're gonna watch some of Ajo real quick, just because I want to set the stage for why I think what's happening right now is really important. This was the tweet that I realized. No one's pricing in the outcome that meme coins are a foundational part of finance and never going away. Plus, pump has unfavorable moat. Hundreds of launch pads have tried and they all failed. It's not Rollbit. Pick below related. The pit is going to be the greatest trading community to maybe ever come out of any of this. I'm just saying, man. They're gonna look back on these days and think, man, we are good at what we do. I'm in the shower hearing my name. Wild. Yeah, sorry, man. All right, I'm gonna read you this Quinn Thompson tweet, and then let's start talking about some fucking macro. Let's start LARPing this macro, guys. Global policymakers are staring down the barrel of an uncontrollable situation. May 1st. They are simultaneously attempting to devalue the dollar, suppress bond yields, and manipulate commodity prices lower. They have succeeded in the short term. It has felt like crack cocaine for global equity markets. The stock market strength has masqueraded. I don't want to say that word. Masqueraded behind the AI singularity narrative, as there's been no other obvious reason for such a large equity move amidst the background of such a worsening supply chain backdrop. This is leaving most market participants unaware of what is really going on under the hood. Why it is about to become uncontrollable, however, is due to the nature of the beast. All of the government interventionalist tactics I listed above are economically stimulative and financial condition loosening. 1. Suppressing the dollar eases global liquidity. On top of already $500 billion in ongoing Fed QE disguised as RMPs, I don't know what that is. It sends stocks higher, creating a positive wealth effect, reinforcing growth and inflation. And so it's like suppressing the dollar makes stocks go up, which makes the market fucking sound and everyone think America is healthy. But then you can't really like pull it back because you like slow growth and it feels like it's like leverage basically. 2, suppressing bond yields makes refinancing costs cheaper, all else equal for businesses and consumers, reinforcing growth and inflation. So that's what they're doing. Printing money to suppress bond yields makes everything cheaper, reinforcing growth, but also inflation. And 3, manipulating commodity prices lower provides stimulus for businesses and consumers, avoiding the higher prices required to force demand destruction and bring on more production, reinforcing growth and inflation. That's like suppressing oil prices because we're in a fucking war, and 20% of the world's oil supply is offline due to the Strait of Hormuz. So, all right, let's just like watch. I want to watch 10 minutes. We're going to have Feijo on. We're all over the place today, man. Forgive me, but this is the way the world fucking works. Some days there's weeks where nothing happens, and there's hours where everything happens. We're gonna watch 10 minutes. We have Feijo on 15.
Is a recommendation to buy or sell any investments or
products. I'm sorry, they're just the best for macro schmacro. The only guys that do this and understand crypto as well.
All right, what's going on, everybody? Welcome back to another roundup edition. All right, let's talk about the elephant in the room. This news that just came out this morning of what Secretary Bessent is doing. So last episode, obviously, we had most of the episode was framed around this idea that marginal macro policy is moving to the Treasury more so than the Fed. And Scott Bessent and Treasury is making sure that the long end does not get unruly. And nothing really hit. Obviously, we've had these small little sample, little appetizers, like we had the QRA where they changed from, potential increases in coupon issuance to a change, which opens the door for potential like lowering of coupon issuance. So already signal there. There's yen intervention stuff, and now we got this today, which is that they're announcing an increased size of nominal long end Treasury buybacks. So this is definitely pretty meaningful, and the language is really aggressive. Like, let's just read it here. The U.S. Department of the Treasury is increasing by at least double the size of liquidity support buyback operations for long-dated nominal coupon securities.
By at least double.
The 10-year to 20-year sector and the 20 to 30-year sector. The current maximum size of $2 billion per operation will be at least $4 billion per operation.
At least is crazy.
Okay, what does this actually look like? Is that these are buybacks, so they're not just. You have to, the first thing you have to think about is, okay, what's funding the buybacks? And so the first leg, what are they buying? They're buying author-on long end bonds. They're super liquid. Obviously, we've been talking about how the 30-year and the long end has been, at least decade highs in yields. So it's getting pretty unruly. So they're coming in, they're buying the author-on bonds, which are the most liquid. And what are they funding it with? They're funding it with Treasury bills. And so you net that out. If you're issuing Treasury bills with no duration and you're buying duration, you're taking duration out of the market. If that sounds like a different variation.
I don't understand this part that much. I'm going to be honest. The funding, I don't fully understand this.
Of QE, it's because it is. And yeah, so obviously this is like hilarious because, Bessent, before he got confirmed, he was ragging on Yellen for all these things. And now he's just like putting the pedal to the metal here. Like, at least $4 billion. So, this is obviously a pretty huge moment in terms of this debasement narrative. Yeah, I want to pause there and get your read on
debasement.
Yeah, I know you had a few tweets talking about how things are going to get pretty tough for Bessent over the next few weeks as the 30-year is going higher. And I don't know, he lasted about a couple days before he capitulated here. So I'm curious your thoughts.
Yeah, I mean, there's a lot of unresolved issues facing this market. And I think people, it's easy to look at prices and say it's fine, right? Because at the end of the day, that's what people tend to use is their barometer of like economic health or treasury market health, whatever, is like stocks, right? Okay, stocks are highs, everything's fine. But what isn't being taken into account is that's a nominal number, and you can play with that number by, all the things crypto bulls for many, many years have been, and gold bulls for many, many years have been talking about, which is debasement. And so starting in August, we had the dollar.
I haven't heard the word debasement in a long time.
Debasement via yen intervention. Then we had the coming out about the repo facility, and like you said, the QRA, and now this coming after the QRA, which is a very unusual thing because clearly they met, outside of the normal quarterly decision-making process here. And it's, just so happens that there's a midterm election 2.5 months away. So
yep.
I think that reading the tea leaves for the last number of weeks, it's been clear that they are choosing the inflation and debasement path to support markets. But that is very different than things being okay because there's, for example, Strait of Hormuz still closed. There's absolutely zero signs of a deal.
There's no deal
flows,
ever.
The price of oil, I've been long.
First thing we ever sniped was there's no deal. Day one, learning about geopolitics, we said there's no deal.
I think it literally just ticks up every single day without anyone really talking about it anymore. So all of the inflation and things that make bond markets unruly are there, and currency problems and volatility. It's just that they're printing money and artificially devaluating, inorganically, not artificially. It's absolutely officially, what it is, but inorganically devaluating and intervening. So I think it's interesting because it sets up, the midterm elections are a big date in
Thanks for the sub bat.
We're still 2.5 months away.
Midterms is 2.5 months
on a weekly basis. So
yeah,
one, how big are the problems that they're doing yield curve control when the S&P 500 is at all-time highs? This is crazy. In 2023, I just tweeted some of the stuff I was writing back then because sniffing that out led to an extremely profitable period. But that was after a huge correction. Bond yields were well over 5. Stocks were down 12%, I think, at the lows, and they came in and kind of fixed this. Here, there's volatility already stifled. Dollar, was already weakened. Stocks already at highs. So it's pretty unprecedented, really. I mean, this is Japan stuff. And if you want to know how this ends, go price gold, oil, and anything else that's a hard asset in yen.
That's insane. If you want to know how this ends, go price gold, oil, or any hard asset in yen.
Because this is the playbook. They've been doing yield curve control and all these things for years and years and years without more obvious.
All right, let's do it, actually. I don't even... Bitcoin USD / Bitcoin JPY. I don't even know what I'm looking at. I don't think I did this correctly. Change the USD. How? Oh. God, whoever said that is a fucking... Looks the same. No, that's not gonna do it. Bitcoin JPY. There's another way to do it. Hold on. There's a way to do this. I know there is. Or is that just 11 mil? Bitcoin / yen. Wait. Why is Abe Kurz? I actually don't know how to do this, but the point was, yeah, it looks the exact same. The point was it's inflated way fucking more is the point. Hold on.
Is problem. Anything else that's a hard asset in yen. Because this is the playbook. They've been doing yield curve control and all these things for years and years and years without more obvious problems, which is what the standard used to be. So for me, inflation and debasement are the name of the game. They have been for a number of weeks now, and this takes it into overdrive. And, Besant.
Okay, that's what I thought. 11 mil Bitcoin, in fact, if priced in yen. That's what I thought it was. 11 mil Bitcoin. Like 100x.
Knows all this, and he knows what this is going to do.
Yeah.
And he knows that the outcomes and the side effects this produces. I mean, this guy is very intelligent and knows exactly what's happening, but there's political incentives that he has to play for. So, row with the stream. And I would imagine he doesn't want a 6, 7, 8% inflation problem in 2027. So I'd imagine he will take the air out of this via.
Yeah. But there's a ton of runway now for them to really goose it.
But exactly, we're 2.5 months away, and this is what's happening. So I'm just, we've been getting long and long and long.
I have a bunch of questions for them.
Inflation protection, and I guess weekly now there's an announcement that keeps it going.
Yeah.
But it's crazy.
I think for me the signal was, look, back in May, June, we were in the dark. We didn't know what the plan was. We didn't know what the playbook was going to be. There's a lot of question marks around Warsh. There's a lot of question marks around Besant. I mean, just literally like a week before that QRA, there's talk of, are they gonna signal hawkish that they might actually start to normalize the amount of issuance on the long end? So there's a lot of question marks.
He's on in 4 minutes. I just wanted to get a quick roundup for a couple questions before he's on in 4 minutes.
And it's become extremely clear what the plan is, and the plan is to manage the long end because look, this is just it's a repeat of everything we talked on the last roundup 2 weeks ago. Like, the AI build out is now being funded on the marginal basis by debt issuance because operating cash flow.
I'm fully cramming for the test.
Has been tapped out. So they're going to the corporate bond market. The corporate bond market is anchored to the long end. We've been seeing this, they are hand in glove here in making sure that those yields don't get unruly because we need to build out the AI build out because it's a geopolitical game against China. So they need to make sure that this happens. Warsh has talked about AI a lot. He's on top of it. Besant's on top of it. So that's the one big leg that they're trying to focus on. And then in the same vein, there's this idea of emerging fiscal dominance where marginal policy moves to Treasury. It started with Yellen, and here we are now. It's big. One thing I want to talk. So a couple of years ago, 2024, Stephen Moran and Nouriel Roubini wrote a paper called Activist Treasury Issuance, and it was really just piecing apart everything that Yellen was doing back then, putting a name to it, and it really provided people with the vocabulary to understand that this is just if QE is on the taking duration out side of the market. All this stuff
taking
is
duration out.
We're just not putting it in at the onset. Or you can even make, I mean, you can make the case with these buybacks even that it is also taking duration out. So they wrote a paper back then. So this morning I pulled it up because I wanted to go just
Taking
reflect
duration
on what's in
out.
there compared to this announcement today. And it's illuminating. So this paragraph was about buybacks within that paper. And the most interesting part, so the best way to contextualize, like, what does this really mean? Is it QE? Is it not? It's the best way to look at it is just this section here. Basically, it's fiscal operation twist. So whereby the Fed lengthened.
Taking duration out. All right, I'm excited. It's gonna be a fucking fun one. It's gonna be here. If you want to watch the full video, you can watch it. Phaedra is coming on like right now. Selling long bonds for short bonds. No, I think they're selling short bonds for long bonds. Oh, but taking duration out would mean they're taking duration out, which would mean they're selling duration, which would mean they're selling. Huh? I don't understand that. I have a bunch of questions for him, but I'm the most interested on like why is this debasement and what does it mean for Bitcoin is what I obviously want to know the most. Quick chart check-in before our friend pulls up. If you mean taking duration out of portfolio strategy, it means protecting your money from interest rates. When you move duration, changes in interest rates will go longer because of value behind. Macro is like so to me. Macro schmacro, I used to call it, but I'm reformed. Pump up 18, Bitcoin 71.4, Per is up 2, Ethereum's up 4, Soxel is now green, SPY is now only down 0.2, Nasdaq down 0.75, IBB is down 2.5, getting crushed. They're selling more short-term notes because nobody wants to buy long-term bonds. Yeah, okay, that's what I thought. So they have to buy it themselves. Selling short-term, buying long-term. People only want short-term. Can they just like remove the 30-year as an asset entirely? Like, is that a thing? If nobody wants it, can you just like get rid of it? All right, Luke, he's in the waiting room. I'm gonna let him in for you. I'm gonna get up real quick. No music because he's in the waiting room. I don't want to hear him talk. And then when I come back, we have macro to talk about what the fuck just happened yesterday and why Bitcoin is up like a gajillion %. All right, BRB. All right. Luke, is he good? Is he good? I'm gonna assume yes. And then I'm gonna tweet and I'm gonna say let me just tweet and I'm gonna say live with Feijao talking about what the fuck is going on with macro. Post twitch.tv/. All right, our 45-minute run LARPing as macro strategist has now come to an end because we have an actual one with us here on the stream. It's Fei Zhao, the GOAT, the truth. Friend of the stream, friend of mine, huge fan of this fellow. If you're watching on YouTube or Twitter and you would like to chat, twitch.tv threadguy. And on that note, Luke's talking to him, but we're going to get him on right now. And let's also, damn, Manuel just replied to my tweet. The guy who told me to sell retard. He said, I'm so happy the pit bullied me out of my short bias. No way, man. Let's fucking go. All right, let's get it. Let me just flip you like this. And boom. Fei Zhao, Mr. Felix. What's up, man?
TG, what's up, dude? How are you?
It's good to see you, man.
Yeah, it's macro season again.
I'll tell you what, I've had a brutal 24 hours LARPing as a macro specialist, so thank God you have joined us. Dude, your episode was sick yesterday, by the way.
Thank you. Oh, thanks, man. Appreciate it. Yeah, I saw you had it up. You're watching, trying to piece through it. So I have some context. Hopefully I can give some some explanations here for you.
Let's fucking go. I mean, I know there's a lot to break down. It's a 45-minute episode and there's a lot in there. I sent the link, but do you want to just start maybe with like why the announcement yesterday and what Besson did was significant and why the debasement narrative has popped back up with Bitcoin, gold, hard assets, commodities?
Yeah. Okay, there's like a lot of context and definitions that we need to get right here to kind of fully explain this. So for all of 2010s, a lot of, marginal increase in liquidity or whatever you want to call it came from the Fed and QE. Like we had these QE programs, and like, what is QE? What is quantitative easing? It's the Fed going into the market and directly buying bonds and swapping it for a central bank reserve. And that sounds kind of wonky, but what's important there is that the Fed, they have unlimited amounts of central bank reserves. Like that's something that's pretty much money like between different banks. Like it's a dollar that's just like between different banks. So they swap that and then they buy a bond. And typically it's, for QE, it's long duration bonds. So when we talk about like duration, it gets mixed up a lot with maturity. Like we don't need to get into like the wonkish math around duration, but an easy way to think about it is just like similar to maturity, 10-year, 20-year, 30-year. Like those act more as a risk asset than something like a T-bill, which is like, a 3-month T-bill that acts more like cash. So when somebody's trying to buy a long end bond, like a 10-year, 30-year bond, they're weighing that against different things, like more risk assets. Because you're taking on more risk about like what's your expectations of inflation. So there's only a certain amount of capital in the world that wants to own risky assets like that, like a long duration bond, versus the short end, cash that earns a yield without much duration risk, or like interest rate risk is another way to say it. Everybody wants that. Like who doesn't want a 3-month T-bill that pays them, I don't know, 4% or whatever it is these days.
And when I'm looking at the 30-year chart, I'm looking at the riskier bond.
Yeah. More interest rate risk that you're taking on. So for years, to try to get, get financial conditions looser, to really stimulate, they would try to take duration out of the market so that when there's less supply, like supply demand dynamics are really useful here to think about. So when you're taking duration out, that means there's the same amount of capital chasing after less and less duration, which means higher demand for those, which means for interest rates, it's lower interest rates. It means also that, okay, well, if, there's this idea of going out on the risk curve, so that somebody who's buying that long end bond, if they're like, okay, well, now I only get 1% on it, I'm going to go buy equities instead, because that might, I'm going to get a better return there. So that was the whole ball game for a long time.
Just so I am clear, like taking duration out means like the Fed is just buying these bonds and like locking them, basically taking them out of the market.
Locking them on their balance sheet, and holding. So they're warehousing that duration risk on their balance sheet, and they're the Fed. Like who cares, right? Versus in the market, it does matter a bit more. So that was the name of the game for a long time. Then in 2022, we started to see it shift to, okay, so if that's just taking it out, what does it look like where we just don't put it into the market in the first place? And that's what the Treasury was doing. That's what Yellen started to do, which is that, okay, instead of issuing a lot of long duration bonds into the market and making them absorb that duration, what if we just issue a lot more short-term T-bills, like 3-month T-bills instead. And then it's like we're basically just giving them cash in some ways. You know, there's a limited demand for T-bills, really. Like everybody wants T-bills. So it's like, okay, instead of so we're just gonna, you know, constrain the amount of duration we're putting onto the market. So that's what Yellen was doing the past few years. Ever since then, we've had this interesting regime now where they provide guidance on whether they expect to see any sort of increase in the amount of long end duration bonds that they're going to issue. And they've held it flat for quite a few years now. Yeah. So this is where, you know, Bessent gets a lot of shit because he wrote op-eds before his Treasury Secretary criticizing Yellen for doing this and kind of saying that, you know, you're basically playing monetary policy from the Treasury side of things.
This was in 2024.
Yeah, around there.
Is there any like rule or standard for quantity of issuance for each vehicle? Like, is there...
kind of. So there's a long-term target where they want to have about 20% of the total debt issued to be T-bills. After COVID, we were at about 17% of the proportion was T-bills. So there was valid room to go from 17 up to that long-term average of around 20%. We're at about, I think, like 22% now. And within that context, we're above the long-term range. So you know, every quarter we have this thing called the QRA, the quarterly refunding announcement, where they provide guidance on how much they plan to issue and in what durations or maturities they're going to issue. Okay. So they've starved that long end by just providing as little as possible. And then the next thing they added on top as well, so is this idea of Treasury buybacks. And
got it.
So if you think about QE, during QE, the Fed can just swap the bond for a central bank reserve. And that's, you know, people make arguments about whether that's net new money creation or money printing or not. I don't know. We don't need to get into it.
And these are essentially dollars.
Yeah.
Okay.
Yeah. But when the Treasury does it, you know, they don't have unlimited amounts of money like the Fed does. So they need to fund the buybacks with something. The thing they're funding it with is the T-bills.
Got it.
And like we said, there's a limited amount of demand for T-bills. So they issue a bunch of T-bills with no duration, like almost no duration. And then they buy
which have
back...
infinite demand. It's like cash.
Yeah, pretty much. Like it's, there's an insane amount of demand.
And who's buying these T-bills? Like, because it's massive size, right? Like, who is it? Like,
I mean, it's everybody. It's banks. It's people like U.S.
Like, are
citizens
you buying them
to
as like a retail trader?
Yeah, you can go to Treasury Direct and participate in the auction and buy those T-bills. Or like when you go into a money market fund. So say you have like, you know, some cash you want to put in a money market fund. That's basically, you give it to the money market fund and then they go out and buy the bills and then they pass on that yield to you. Okay, so now we have these Treasury buybacks. So they started it over the last couple of years, small amounts, super small amounts. One portion of those buybacks was to buy back T-bills, and that was like a liquidity provision thing. We don't really need to get into it. But the other component of it is basically the long end. And in the long end, there's two types of bonds. There's the off-the-run bonds and the on-the-run bonds. The super simple way to think about it is on-the-run bonds are the bonds that were just issued. You know, when bonds get issued, typically, you know, it's at like a $100 par value. But say interest rates go up, then that par value goes below 100. So it's trading at a discount to reflect those higher interest rates. So once those bonds become owned or like old and not part of that latest auction, they become off-the-run bonds, which are much more liquid. Those are the things where when we've seen, you know, Treasury, like during the COVID crash, we saw that people talk about the Treasury market freezing up. This is what froze up, was the off-the-run bonds. Nobody wanted to buy those things. They're super, super liquid. So now what they're doing with these Treasury buybacks is they issue a bunch of bills and then they go into the market and buy those illiquid long duration off-the-run bonds and then take them out of the market. So they're removing the duration out of the market. So it's quite similar to QE in many ways. And so, you know, we've had a steady amount of buybacks, and then obviously the context now for the market is in recent weeks we've seen, you know, long end yields have been going higher. Everybody's been freaking out.
Is it primarily war/oil/inflation driven, or?
It's a lot of different things. It is that for sure.
The yen situation.
Yeah, it's the yen situation. I mean, globally yields are going higher, generally speaking. There's questions of fiscal spending, excessive spending, deficit spending. There's questions around Fed credibility because the inflation target's been above 2% for like 6-7 years now. So there's a lot of different things moving it. But the fact of the matter is that when the 30-year is getting above the levels it was getting over the past couple of weeks, that starts to have a lot of pretty significant impacts on markets. So the big signal that happened this week is that every quarter the Treasury meets for the QRA, where they decide how much of each tenor are we going to issue. So they came out with that QRA a couple weeks ago, and it was pretty vanilla, other than the fact that guidance that we talked about around how much they're going to issue, that guidance was always about saying, for the next few quarters, we don't plan to increase coupon issuance. We don't plan to increase the amount of long end bonds that we're going to issue to the market. They made a change to the word increase. They changed it to change. So by changing it from increase to change, suddenly they're saying, what if we actually decrease the amount of long end bonds that we issue? That was like not on anybody's cards. Like nobody was expecting that. So that was really interesting as the first signal. That's what really started to get me excited a few weeks ago. That paired with the yen intervention that was going on, it's like, okay, they are moving to elevate or accelerate the amount of manipulation or suppression of the long end. And then lo and behold, we get this announcement yesterday that literally 2 weeks after they just met for their quarterly announcement, suddenly out of nowhere, they're like, look, we're going to double the amount of long end buybacks that we're doing at the very least. So we're going for 2 to 4 billion. And there's this like,
at
I know you're
least
saying
4
this in the
billion,
stream.
right?
Yeah. Like very, very aggressive language. And it's like, okay, that just came out of nowhere. That's interesting. I'm sure that came from the top. That was like, Treasury is political. It's Bessent is under the Trump administration. So out of nowhere, after their QRA meeting, they come out with this news. So that was just kind of the full green light of like, okay, look, they're going to throw everything at this. And so, yeah, going from 2 to 4 billion is not a lot. But the signal is huge and the language is huge. Like in the same way that QE, back in 2020, yes, they're doing a lot of QE, but a lot of the move was done by the market through the signaling mechanism. Like the markets do a lot of the work. So the signal here is like, all right, we're going to do whatever we can to keep the long end lower. And because there's a lot of important things that are happening that are associated with it, like the AI build out, right? Like, the AI build out was largely funded by these hyperscalers because they had so much free cash flow, but that's been tapped out now. So now they need to either issue equity or issue corporate bonds into the market. Corporate bonds are priced off the long end, or at least attached to the long end. So it really, that's why people are starting to tie the two. That
so
like,
it's fucking
okay, is the amount
expensive for them to tap more markets for cash.
Yeah, and so then the credit spreads widen. But if you try to keep the long end lower, that does help with keeping that whole issuance that's going to be probably accelerating to keep going. So there's a lot of different things at play. And I'm kind of jumping everywhere. But the fact of the matter is that, yeah, it's a major signal of the commitment that's ongoing. And then the last part of that commitment is like, okay, well, if we're doing all of this in August and we have the midterms in November, like, just think through the game theory and the incentive structures. Like, why would they throw everything in August and then in September and October just be like, nah, we're done, we're good, like that's it, right before the midterms? Like to me that's just it's clear that we're in the early innings of this escalation, and the market, especially the bond market, is not going to jump on the wagon right away. Like you can see a lot of so obviously when this buyback got announced yesterday, yields came lower pretty quickly. Yeah. We've already given back a lot of it.
Basically the same price before, right?
Yeah. So, we're going to have to see a lot of this. It's going to take a while before the market is convinced of their resolve. But in the meantime, it's like, okay, how do I ride the coattails of them trying to tamp this down, right? And for me, it's those classic debasement assets. So Bitcoin, gold. And what's really interesting is basically since that announcement happened, like US equities haven't really done all that good
at all.
And my theory is two things there. One, like what they did yesterday, the dollar just nuked. And, typically lower dollar means higher risk assets, generally speaking. But
Yeah.
if you look at where the flows have been in recent years into US equities, it's been a lot of foreign buyers. And foreign buyers, they make money in a different currency, and then they need to buy US denominated assets. So, if a bunch of European pension managers are long a bunch of US stocks, and then the dollar goes lower, that means the euro goes higher. And so they're, on a currency basis, like even though say US equities go up a bit, because of that dollar decrease on a currency basis, they actually probably lost money. So this outright intervention is, they're trying to manage that long end, but at the same time is obviously that leads to a lower dollar. And so, yeah, it leads to marginally less interest in exposure to US assets, which is why I think it's really important to consider like gold and Bitcoin are not US assets. They are more pure expressions of this questioning of
we just got an announcement. Besant, we will routinely do buybacks and increase size of buyback. Besant will be more than 4 billion. Whoa.
There you go. So there you go. So exactly. The bond market was testing him today. They gave back and he's like, no, we're just getting started, buddy. Like
whoa.
So this is the signal.
Wow, dude.
Yeah.
So he basically said like, call my bluff. Bond market goes up, and he says, "Fuck you guys. I have infinite money to throw at this."
Pretty much, like, it's okay. So there's this famous thing that happened in central banking in like the 2010s in the ECB. Mario Draghi, he had this whatever it takes thing. Like, this was during the European debt crisis, and people are asking like, "What are you gonna do? What are you gonna do?" Like, shit's hitting the fan, and he's like, "We'll do whatever it takes, and believe me, it'll be enough." And it's like this famous quote. I kind of feel like it's the same situation here. Best it's like he has some work to do to convince the market, as you can see, but he's right back there in the headlines right now.
Okay, I got
he's
a bunch
gonna
of
work to
questions
convince
for you.
them.
You, by the way, you pretty publicly came out and like said you were buying Bitcoin like 4 weeks ago, a month ago, if I'm not mistaken, a month ago, I think.
Golden Bitcoin. To be honest, initially it was because I felt like we were at this point of peak hawkishness. Like people were pricing in rate hikes in July, rate hikes in September, and I just didn't really think those were going to play out. So it felt like a good moment. And then on top of like everything that's happened in the last month with like this yen intervention stuff, the QRA, it's like, okay, it's clear that you want to own debasement assets. So yeah, it was pretty, both of those charts have just been wrecked over the last few months because of those hawkish fears, and like higher real rates. So yeah, got in on that, and then now my confidence in them are just building like a lot.
Can you explain the significance specifically of the 30-year and the price that it is at? Like why now? Why is Besant saying we will empty the kitchen sink to defend this line on the long end? Like what are like the biggest implications of this being really high, of it being really low, and why are they all out on defending this level?
Yeah, it's kind of it's nebulous where the line gets drawn in the sand. Like everybody has their their theory of where that line is, or where the treasury put is, we can start calling it, probably
the treasury put, you're saying?
Yeah.
Okay.
And one way to look at it is around interest expense as a percentage of GDP. Like obviously the other side of the equation of all this debt that we're issuing and higher inflation and higher yields is that's more interest expense from the government. And like just last week, we saw interest payments as a percentage of GDP hit an all-time high. So we broke out of like,
that's what percent? What's the number of percent?
Like I don't know. I tweeted it the other day.
3.5% of GDP is interest payments.
Yeah,
that's not. It's like it's nuts.
Oh, let me find the chart. It's close. Yeah, so 3.3% ish. And so that's like a all-time high. Obviously, like on a nominal basis, interest payments have already been higher, but it's important to look at it as a percentage of GDP, and that's what broke out. So
got it.
That paired with higher inflation, it starts to lead to a loss of confidence in the long end. Like in this secularly higher inflation regime, nobody wants the long end, because they don't want to take on that duration risk. Because in a duration risk, if I go buy a 10-year bond at say 3%, and then rates go to 5%, I lost money, even though I'm earning, bond market stuff gets like really wonky really quickly.
Yeah.
You have a 30-year bond where you're getting a coupon of say 3%, but you can lose money on the price. So say that bond that you bought at, say, I don't know, $100 par value, and then at a 3% rate, and then it goes to 5%. I don't know, don't quote me on the numbers, but say it goes down to $90. So then you lost $10.
Got it.
And it gets even wonkier because that only matters if it's like an unrealized loss, right? Like you hear this back in like 2023 during the regional bank crisis. This was a lot of the issue, was that because inflation went higher, rates went higher, and then all these bonds, their par value, is worth less.
I see.
But eventually, say you get to maturity and you keep getting those coupons, it eventually will mature at $100. So you don't actually realize the loss unless you have to sell. So the whole name of the game is
you're not holding it for 30 years.
Most people aren't. I mean, like pensions and people are.
So if you're willing to go the distance, you don't
Yeah.
lose. But most people don't want to go the distance.
Yeah.
Got it.
And then, the other side of the equation too is that, a reserve currency in a modern economy, like a lot of that comes down to, is there long-term confidence in your bond market and demand for that debt, right? Like it can be really risky from a risk management perspective for the Treasury to just, the question is, right, like why don't we just issue all debt as T-bills, right? As 3-month T-bills. There's no duration, et cetera, et cetera.
I was about to say, why don't we just take the 30-year out entirely and just issue?
I mean that could, there was, I think in the early 2000s, there was a moment where they didn't issue any 30 years. And like the 20-year is relatively new in the last decade. But yeah, the reason why you don't do that is because then that's like basically like what a banana republic looks like. Like, is that, say you have, it exposes you to much higher roll risk. So say that 3-month T-bill expires in 3 months. If interest rates are higher, suddenly that's going to cost more. So you're exposing yourself to rollover risk, basically. So they're trying to risk manage across the whole maturity, which is that, okay, if we issue a bunch of 30-year bonds at 2%, even if rates go to 5%, those 2% bonds, we only have to pay 2%. Like that's what Besant's thinking about. But if we issue a bunch of bills at 3% and then rates go to 5%, when those bills roll over in 3 months, suddenly, oh shit, like we have a high rollover risk here, and we have to reissue those bills at a higher yield to maturity. So there's a lot of like, I don't know, different aspects. People get really doomery there sometimes, where they think that like there might be like a treasury auction failure, or they might default on the debt, and those aren't likely.
Treasury auction failure, how does that work? Like no bidders?
Yeah, but it's not even worth contemplating.
Okay,
like there's backups. Like literally the Fed will go into the market and cover it if they need to. There's backups. So it's not going to happen. But what will happen is this debasement that we're seeing, and the exhaust valve of that is the dollar. And therefore, yeah, riding the coat winds of those debasement assets like gold and Bitcoin is where you want to be, basically.
Yeah, so that was what I was going to ask next, is like, why? Also, there's another TradFi tweet. U.S. Secretary Besant, rates have nothing to do with buyback decision, he said. My second question is like, yeah, why is the debasement assets the biggest beneficiaries of this? And like, how big long-term beneficiaries are they of the decisions being made right now?
Yeah, so gold is a lot cleaner in that perspective. It just has a lot more history behind it.
Yeah.
The correlation in gold has changed over time. Like it used to be really tightly locked with real rates, and like when real rates go higher, the price of gold goes lower, and vice versa. And that's kind of why it's sucked over the past 6 months, is because real rates have been going crazy higher, and it's been hurting gold.
I see.
But there's also this other component now to gold, which is just this lack of faith in U.S. bonds, or diversification from other countries. Like China's been buying gold like crazy. So that is super clean as an exposure because it's not as exposed to cross-border capital flows, like the thing we talked about with the European pension managers. It's just gold, right? Like it's not like buying the Qs and then the Qs are priced in dollars and then you have to wonder about currency hedging. It's just like I'm buying gold. Bitcoin's on its way to that as well. I mean, this is the whole thing about markets, right? This is like, yeah, gold, Bitcoin ripped. It's awesome. I bought a lot of Bitcoin on this reason, and I'm happy right now. But how much of it is because of this? How much of it is because it's already down a bunch, and
Cycle bottom,
a lot of people
started.
People were bottom shorting because they expected one leg lower, and then you buy the giga bottom in October. So like over the last week, a lot of open interest has built up in Bitcoin. So, you could probably attribute a lot of this liquidation run to that as well. So it's always hard to piece apart, but I mean, I feel like it's a cleaner read on exposing yourself to this. But obviously, like I have higher confidence in gold being 1-to-1 tracking that, but I still think it's worth a punt on Bitcoin as well. Especially because like the market's just so washed out. Like the market structure side of things is just like, there's no more sellers.
What was the biggest criticism of when Yellen was doing similar actions in the market, like in this this paper?
I mean, they basically believed that it was a version of QE that was usurping monetary policy. So the criticism was that Yellen is hijacking monetary policy from Powell and the Fed. And they're just so suddenly it's a political institution deciding monetary policy in some ways.
Got it. And Bessent himself, like literally Bessent was the one that was the most vocally critical about this.
Yeah.
So he's doing it right now. Is this like a desperation sort of layer?
I think it's just like, man, I mean, this is the whole game theory of why you never you've heard Tyler on Four Guys talk about like, the Ponzi continues. This is the Ponzi. It's the game theory that it's easy to criticize from the outside, but when you're in that chair and suddenly you have pressure from your president, you have all these different vectors, like, it's easy to criticize from the outside, but once you're in the seat, it becomes very different. So, I don't like how gaslighty he is about it, but I also understand that, like, I think if you put anybody else in that seat, they would probably come out with the same outcome. I think the game theory is kind of set there. So it's just like, it's the nature of the beast. Like there's bigger forces at play. He probably didn't do a good job for himself by criticizing and talking about how he's going to change all this. And, he had these ideas of 333, right? Like 3% GDP growth, 3 million barrels of oil, like 3% 10-year. So he kind of shot himself in the foot by talking about all these great things he's going to do. And then that's what makes it very hypocritical. But the fact of the matter is that like these events are kind of the game theories, the playing field is set. I think this is the outcome regardless of how you play it or who's the player playing it.
What about doing this? So like I just read More Money Than God chapter where they talk about Soros breaking the Bank of England and like Bessent and Druck and they're actively intervening with the yen. They're trying to prop it up instead of devalue it, which is like devaluing is like the cardinal sin, but adding to it is like a little bit unspoken from, I watched this like Patrick Boyle video. Now I Lap is a macro guy, but like, what do you think of his ability to like prop up the yen market while also fighting this yield battle on the long end? Like, too many things at once, or are they sort of independent of each other and they have no real relationship?
No, they're all interconnected. Man, I don't know. I mean, it's really hard to fight market forces like this with direct intervention. You have to throw a lot of money at it. Like there's a reason that the Fed balance sheet became trillions of dollars over the last decade. It takes a lot of money to move the mark. Like, okay, let's look at, so I know in the roundup you're looking at, Kun was talking about go look at Japan to understand where this goes. The
Price
reason he
gold
said that
in JPY.
Yeah. And the reason he said that is because, Japan's kind of like 10 years ahead of everybody in terms of like end game central banking in many ways. Like they did the yield curve control experiment where they directly said, the 10 years not going above this level and we'll buy unlimited amounts to make sure of that. And man, it took a lot of money for them to do that. and then eventually they had to give up on the whole thing and reverse out of it. So it's hard. I don't know how tenable it is. I mean, eventually, like you would think that you can't keep kicking the can down the road, and some like eventually we have to get our house in order here. But I think there's like a long history of people who have been smoked in that idea, in that trade of like trying to fade it. So yes, right now, like the market's testing Besant and seeing his resolve, but I don't see that ending anytime soon, and I think he's going to continue to try to keep all these things afloat. How tenable it is, I don't know. I mean, maybe this is the max. I don't know. I don't think so, because I'd be surprised, like I said, about them throwing everything that they can in August and then just like sitting on their hands for 2 months into midterms. But yeah, it's not easy to do these direct interventions. Like eventually, free markets do eventually, find an equilibrium. But a lot of money gets burned in the interim, and that's where we can make make some trades.
How did Japan get out of it? Like what did that, the unwinding, what did that look like?
Yeah, so it happened over the last few years. So after COVID, they started to finally get inflation again, because obviously for decades they're just in this like stagnation. So they started to get inflation again. And then what started to happen was that direct yield curve control, almost like every week, we started to hit the upper band. So suddenly the BOJ had to spend like a stupid amount of money trying to just defend this level.
Whoa.
And so initially it was like, okay, we're going to widen the band before we intervene. And it's like, okay, now we're changing the band and we're going to move it up from, say, 25 bips to 50 bips. And then so they just kept ratcheting higher. And so that's why like the JGB long end market, the yields have gone up so much, just because there's a lot of normalization to do to go from basically zero to reflecting where inflation was. A lot of people thought that would just cause, Armageddon in markets, this normalization of the JGB market, but it didn't. But it was still somewhat unruly. But I think the big lesson there was that direct yield curve control is not really a useful tool, which gets into, okay, so one thing I wanted to talk about with everybody was this like whole, as soon as these things happen, everybody tries to jump on like, what's the right acronym to use or the definition? Is it QE? Is it yield curve control?
Your favorite, you love QE.
Yeah. The issue with those like discussions these days is that people use QE and yield curve control to mean different things, not the direct definition that it was originally conceived for, which is fine. Like I've come to relent on it, because it's just like, this is how language evolves. Like now QE just means any sort of liquidity easing, and yield curve control, people refer to that as any sort of suppression of the long end market, however we do it. So yes, we don't have direct formal yield curve control where like the BOJ, they say the 10-year is, we're not going to let it go above 4%, and we will spend unlimited amounts of money to make sure of that. Like that's not what we're doing, but we're certainly doing some version of a yield curve control. And I would make the argument that we've been doing it since 2021. So like, have we been in a regime of yield curve control? I would say yes, but obviously in the technical definition of it, we haven't. But like, I don't think that matters as much. The signal is that there is some sort of, control of the yield curve.
Yeah. Okay.
Yeah.
What do you think is significant about this happening 2.5 months before midterms? Like what do we need to know about like that midterm date, and like what needs to be solved or unsolved before we get there?
Yeah, I mean, we all know that like Trump's approval ratings are pretty bad right now. There's
Yeah.
the war that he got himself stuck into. So
The 72-hour war.
yeah, odds aren't looking good. Like it looks like the Republicans will probably lose the House. It's a toss up for the Senate. The long end is a reflection of like the housing market, and mortgage rates are anchored to that long end. So that's like a 1-to-1 connection to the average consumer.
Got it.
So high borrowing cost is not great for the average person. Like they're not stoked. So I mean, I would just map it towards just this broad mapping of them trying to play whack-a-mole as much as they can into the lead up of it, because they want to, make sure they win the Senate, maybe win the House, and they'll throw whatever they can at it. So it's like if they say they gave up on this whole idea of this buyback and like intervention regime that we've been in for the last month, like long end yields are going to start to surge again. And interesting, if you look, there's an interesting chart I looked at yesterday of when the 10-year gets above 5%, the correlation flips negatively between that and equities pretty significantly. Where like above 5%, if we keep going higher, equities and risk assets generally go lower. And that flip happens above that 5% level, most concretely. So say they gave up on this whole thing, and then we see long end yields really go nuts. And one thing to say on that is I think another aspect of why we've seen long end yields go higher is because the Fed is refusing to hike rates. Because, Warsh talks a lot of tough talk, but actually refuses to actually make it happen.
Is part of the reason the long end is ripping is because Warsh is sort of like, make me hike?
A little bit. I think he wants to let the long end do some of the tightening in some ways too. I don't know. I mean, one day I'll wake up and feel like there's some concerted plan at 4D chess going on. And then another day I'll wake up and be like, this is, nobody knows. Like, we're just building the plane as we're flying it. Like, I don't know. So,
okay.
I mean, maybe some days I'll think, yeah, they're trying to let the long end go a little higher to try to tighten financial conditions, as opposed to focusing on the short end. But then other days I'm just like, I don't know, it doesn't feel like there's a cohesive plan. So it's hard to say, but, yeah, so it feels to me like they're incentivized to really try to navigate this tightrope until the midterms for sure. So that gives us kind of this green light where they're just going to keep ramping until then. And then, okay, what happens in the midterms? Say we get a divided, a split Congress, then you're in deadlock. And then say over the next few months, because of this refusal to hike and this liquidity easing and everything else that's going on, inflation starts to reaccelerate higher. Suddenly you get to like January, February 2027, and you have a split Congress, and then, yeah, say inflation is just getting so out of hand that long ends start to surge again. And then it's like, well, I don't know, this is a split Congress. Like, what can we do? We can't get a hold of spending. Like, blame it on the Dems. So it's almost like they're going to rip it until then, and then there's going to be a split Congress, and then they can just be like, I don't know, we can't do anything. The Congress is split. And then blame it in that regard. So I don't know. That's like a super rough framing, but I feel like it's decently likely.
Okay, what do you think from here then is for people trading, especially people like long Bitcoin and gold? What do we need to watch as far as how this is evolving, announcement wise, yield wise? Like, what are the most important charts for us to pay attention to?
Yeah, so obviously the yield curve, like looking at what the long end is doing, 10-year, 20-year, 30-year yields going higher or not. I think it's useful to look at the 10s 2s curve, so like the 2s 10s. So like the 10-year, 2-year,
okay,
and whether that's steepening or not, and why it's steepening. Like, the 2s 10s can steepen for two reasons. Either the short end, the 2 years going lower because we expect cuts, or the long end is going higher, which is called the bear steepening because of everything that's been going on. So we've been seeing this, the steepening over recent weeks. And then obviously yesterday we got the announcement, and then the 2s 10s just collapsed lower and started to flatten. So keep an eye on the 2s 10s and how that's tracking. Keep an eye on the move index, which is the volatility of bonds and what's going there. Like, I think that's always important. Look at the expectations of the Fed funds rate, or like rate hikes or rate cuts. Like, obviously we had a couple hikes priced in by the end of this year, and that reached its climax over the last few weeks, and it started to reverse lower, and like that, will lead to more dovish on the margins, which leads to higher risk assets. Like, I think that's partly why we've seen such a big rally over the last couple of weeks, is just that re-rating of hike expectations into being more neutral. So that's super important. Yeah, look at the dollar. Like I said, like, a lot of what they're doing with the bond market, the exhaust valve is the dollar, and that's why we saw the dollar go lower yesterday. It's up a bit today because the market's, like we talked about, pressing Besant to see his resolve. But keep an eye on that. Yeah, those are the big ones, I'd say, overall.
So are you just like how are you fully bulled up BTC Gold, or like how are you feeling at this stage? Like are you going risk off here, taking some off?
No, I mean, like, time horizon is always so important when
course.
talking about these things. Like, look, if you're a short-term trader, it probably makes a lot of sense to sell a bit of it on these pops. I'm not really interested in doing that. Like, when I look at those two markets and how washed out they've been, when I look at what's happening on the macro side of things, and then like idiosyncratic crypto stuff of like 4-year cycle, Sailor's been selling and has a pretty good reserve now of US dollars. Like, there's less risk there. The DATs have all sold or been washed out or closed down. Like, a lot of those are ticking boxes for me, that it's like, look, like, I've been slowly buying the two over the last couple months, and I don't really care what happens over the next little while. Like, I'm willing to hold those for probably at least 6 months. So that, like, is just kind of sitting, and I'm trying not to overthink about it. It's not overweight. Like, I'm not just like 50% gold, 50% Bitcoin. Like, I still have some other stuff, like you just random equity plays and that sort of thing. Like, I'm not really all that exposed to the AI stuff right now. Like, I rode the memory trade, and I think the bottom's in on there, but I don't know if we're gonna like rip back higher again. I think there's just like, it's basically doing like what gold did over the last 6 months. Like, I think just some healing needs to happen. So I'm not really interested in being there. So yeah, just like somewhat overweight gold and Bitcoin, but still looking at other stuff, a few single names and that sort of thing. But yeah, like, I'm in it for the long haul. I mean, I don't think you go through the pain we've seen in crypto markets over the last year or so, and then you just sell the first pop. Like, I'm just like, I'm ready to sit for a while. Yeah, maybe I'll give back half of the gains that just happened, but I think in 6 months it'll be a lot higher. So it's like, whatever.
So I was really just trying to deduct, like, which you seem to, that this is like a really big deal for at least potentially a really big deal that could spiral sort of crazy for these debasement trades.
I think so.
Do they publish will we know publicly how much they have purchased?
Yeah. There's, whenever they do buybacks, they provide the results of it. Yeah. No, that's all available for sure. Yeah, it's a big deal. I mean, my boy Andy Constant, like, he was
free. I was reading his tweets. Yes, I'm GPTing his tweets. He was freaking out yesterday,
dude. Like, he's the guy that when these things happen, 9 times out of 10, he's like, everybody stop freaking out. Not a big deal. Like, settle down. Sage man with a gray beard, right? But yesterday, he was not like, he was like, yeah, he's like, he went long all assets. That's his kind of like max long signal, and like, he understands this like wonky treasury issuance stuff better than like pretty much anybody I know. I've learned a lot from him, honestly. So when he's talking about it being a big deal, I definitely listen. So yeah, like, people I respect are calling it a big deal. Yeah, you can get lost, and like, yesterday it was just like endless fights on FinTwit about semantics of, is this yield curve control or not? Like, it doesn't matter. Like, we've been in a version of yield curve control for quite a few years now. Like, the 10-year should have been 30 bips higher than it is pretty much constantly. Like, there is suppression. It doesn't really matter. And yeah, like, people get upset about the political side of it, the hypocrisy, and like, those are all valid, but it doesn't really change the fact that this is where the cards are, right? And like, we're just playing the hand we're dealt.
All right, I just want to ask you one more question. I'll let you go. Thanks for staying for a while.
Yeah, of course.
I don't know how long this has been going on for, but this like market shift where people are not interested in the long end at all, and they only want like super short duration everything. Is this just like a larger shift of every market is just getting more degenerate? Even the least degenerate markets are getting extraordinarily degenerate. Like, is that an accurate reflection or representation, or not exactly?
Maybe a little bit like retail. I mean, the bond market moves on the margin of like big institutional flows that don't really care about that sort of thing. Like the biggest driver, I would say, of bond yields these days is honestly like hedge fund basis trades and like what they do there. I don't know if you've talked about that or looked into it, but like, the bread and butter of these hedge funds is they will be a buyer of those off the run bonds. So they'll buy that in cash and then sell a future on it and capture that basis. And like that has been one of the biggest, buyers of the long end. So you can make the argument that maybe with the amount of leverage they use, they're more short term in nature and creates more fragility. But I would say the reflection of more T-bill issuance is more just the nature of where this whole debt game has ended up. Like, I might be wrong on the specifics here, but like where does this lead to is, I think Quinn was telling me this on an episode once a few months ago, so I might not have it perfectly correct, but apparently in like early 2010s, Brazil got to this eventuality where 100% of their debt issuance was bills. So zero on the long end.
Zero.
And like that is, that if you weren't the reserve currency, that's where you start to think about like debt defaults and that sort of thing. But I don't really think that's a risk for the US, but like that's one direction where the most extreme can go is just like pretty much, all issuance on the short end. Another crazy, like when you think about the sequence of escalation, what is the maximum escalation that we can conceive is the Treasury doing this buybacks where they issue bills and buy the bonds. But then, okay, think about the issuance. They're selling the bills. Who are they selling the bills to? Well, what if they were selling the bills to the Fed? So not to the market.
Oh.
What if the Fed was buying the bills and then giving, swapping it for central bank reserves? Like that is textbook debt monetization. That is like full on money printing. That is the maximum level where basically they're buying the off the run long end bonds. They're selling the bills, but they're selling the bills to the Fed, so it doesn't really matter.
Buying the long end.
Yeah,
to keep
the
it
fund
out,
buying
to
it.
sell
So
more to
then,
the Fed.
Yeah,
Fuck.
like that is the maximum level. That is outright debt monetization to the max degree. Like, it's kind of Pandora's box is out at that point. So that's the max. I don't know.
And that's like Bitcoin goes to $10 million.
Yeah, like something stupid. Like if it's sustained. Like obviously, I think in 2021 in the COVID crash, there's a couple auctions where the Fed was like buying directly from the Fed as they're issuing. So there was a little bit of that debt monetization happening. But if the genie comes out of the bottle, like that's the maximum level. I don't know. I'd probably put like a 5% probability on that.
Okay. But if that ever happened, you would just close your eyes and just fucking gold, Bitcoin, oil, even.
Yeah. But it's a useful thought exercise to then ratchet back to like what are, like I always think in framework. So like here we are now with this level. Best is coming out this morning saying we can go ratchet to the next level. We know the maximum level, so we can see that there's a few more levels that could potentially happen. I don't know what they look like off the top of my head, but they're possible.
Word.
So yeah, I mean this, I don't know. Like I don't fight the Treasury. Like those always don't fight the Fed, don't fight the Treasury. Like I don't know. I think there's a lot of resolve here, and obviously markets are going to test it. We've seen that today. But yeah, I just want to sit and ride the coattails of them trying to do this.
Wow. Dude, you're a special talent. I linked a video.
Thanks, man.
For
I appreciate
guidance. You have who are you going to replace Tyler with?
I don't know yet. Do you have any ideas? Like I think we'll have like some rotating guests for a while that join us.
Mm-hmm.
I don't know. Like I find the roundup's always better with three of us, just kind of talk
like
shop
3,
and banter off each other. Yeah.
You should get on as a chat request for a guest is Daniel Tenrero.
The greatest yen trader of all time.
The laugh.
I would actually love that. Yeah.
You should do it.
Yeah. I might just get like, I need somebody as like he's a nice amount of unhinged. That would be
Have you had fun. Andy on?
Andy who?
Was it Constant?
Oh, yeah, he's been on the show a bunch of times.
Okay.
Yeah.
I never listened to an episode.
Yeah. I don't know. I just need, so anyway, we're gonna get a rotating crew for a little bit, shop it around and keep. I don't want to rush into it. But we'll see. I mean, yeah, Tyler's a special guy. I'm sad that he's behind the veil of compliance now, but he's at a cool new fund, so gotta respect that.
Also, when is digital asset
Digital
summit?
asset DAS, yeah. Oh, thanks, man.
Yeah, get it in, man. Come on, you just gave us an hour. Get him
yeah.
in.
Yeah, October, like during Token 2049,
Okay.
the first day of it, we're doing the Digital Asset Summit in partnership. It's at the same venue as Token 2049. So the Digital Asset Summit, it's much more institutional focused conference. We've been doing it in New York for a while. We've been doing it in London for a while. And now we're adding Asia as well. So yeah, October 7th in Singapore. Whole industry is going to be in Singapore anyway. So for
Hyperliquid Jeff is
Token-
speaking. Is that true?
Yeah, we got Jeff.
How the fuck did you get Jeff, dude? That's sick.
I don't know, dude. Our head of events is an absolute legend.
That is sick.
Shout out Bennett.
Shout out Bennett. Are you interviewing him or is he solo or what is it?
I don't even know. I don't know yet. I haven't seen the agenda. Yeah, he's still cooking the agenda, but
Sick.
yeah, it'll be something cool. Yeah, dude, our event seems killer. Like, you know, the conference in March in New York, like we had the head of the SEC, the head of the CFTC, is kind of crazy. And now we got Jeff at Hyperliquid, so I'm fired up for that.
It's crazy. U.S. compliant and legal Hyperliquid Jeff.
Boom.
Felix, you're the man, dude. Thank you for coming over on the side and giving us some knowledge. You're on a legendary run.
It's nice to see the market be back in a realm I like and I'm decently good at. So it feels good to be back. And yeah, thanks for having me.
You're the GOAT, man. Have a good one. Great to chat.
You too.
Peace.
See you, man.
What a legend. Look, I know it's fucking macro schmacro, but you got to do it. But I'll tell you what I deducted from that. Scott Besson is putting his fucking dick on the table, and we're going for it. Is what I got. That's what I got. We're going for it. And Bitcoin might make a go for it. Pump funds up 22% of the day. It's disgusting. Bitcoin 72.1. Stocks got hit on that announcement. Stocks got hit on that announcement. Yes, they did. Everything did. Stocks sold out red. Nasty day. Flood redeemed an on-stream celebration. I can't even see that. What did he just... I can't even see that. This is disgusting. 22%. Dude, I haven't shown. I know this is a flood thing. We might timestamp this, and then we'll cut back to it and laugh at me. But Flood has his flood thing always be selling, and I'm just not right now. I'm not. I don't tell you. I'm not at the moment. Yeah. I'm not, bro. What do you want me to say? I don't know what to tell you. Let's look at the poly. I'm curious what this looks like now. What price of Bitcoin hit in 2026? Wow, it's only 16% to hit 100K still. How much is it up? Damn, it's hardly even up. 10 to 16%. From 10 to 16. Poly. It's at $55 million of volume on this. Wasn't like 9% last time you checked? Yeah, I guess you're right. It was 9. It was 9 last time we checked. Highest it's been was in May. It was 50. We were like 80 something K. Look at August. What about for September 1st? 1.6% chance by September 1st. That's an insane one. There's no way. What about like $80K? 14%. That's mooning though. God, it was 0.4. Dude, it was 0.4 yesterday. It's now 2026. Wait, look at November 2024. How did this play? Let's see. Oh my god. Was this Cointelegraph? Let's see. 67 in Trump election. 67 to 108 in a really short period of time, bro. Look at this. In 9 days, we went from 67 to 94. Whoa, 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 whoa. In 9 days. 67 to 94. That would basically be like if we were at 94K by the end of the week. Imagine. Flood 77 IBIT limit sells. Ooh. Pump fund's up fucking 21% on the daily. Look at the weekly pump fund. What do you think about base cat? I don't ever think about it. I've never thought about it once. Look at this thing, bro. Oh my god. Oh my god. I think Lighter can have a mega move. My favorite thing is, oh my god, Trump said Hyperliquid, FC Lighter. I'm like, bruh. Oh my god. TG still bullish FWA. Yeah, I like the coin. I just like can't imagine really selling any on-chain stuff. I mean, on spot to you just shove pump. I can't really give much of a take on what to do with pump at this point because my entry is really low. So I don't know what Lighter is. It's well, it was supposed to be legally compliant regulatory mode Hyperliquid, but I suppose that is not the thesis anymore. it was US compliant Hyperliquid, but not now it's like it's hype beta, I suppose, but Lighter's a monster. Lighter's a monster. They're integrated in Hyperliquid in Robinhood. Vlad is a complete fucking Chad. Lighter is a monster. All right. Here's what we're gonna do is final check it on the market. Pump 21. Have you used it? Have I used it? I used it on stream to try perps for the first time like a year and a half ago. Bitcoin 72, just gnarly. When is CZ on? I don't know. I don't think he answered me. And then this. Wait, it retraced the whole Besson candle, bro. Whoa, wait. What? No way. That was fun. We love you. Dude, they're really testing it, bro. Hold on, TradFi. We'll do more than 4 billion. Dog. It's higher. Brian Armstrong, 300,000 to 400,000 by 2030. Where did he say this? Dog, it's higher. Fuck me, man. We might just look. I don't know a fucking. I'm gonna be honest, guys. Before Phaedra came on, I was low key feeling myself on the macro shit. I'm like, this is not that hard. I get the yen. I was low key feeling myself on the macro stuff. After a conversation like that, I realized I don't know a damn thing. But what I do know is I know one thing about macro is Besson buying long end equals debasement, and he's going to buy long end as long as this chart goes up. That's all I know. Is the more this chart goes up, the more he has to buy, the more theoretically Bitcoin goes up. That's all I know. Anything beyond that is completely out of my completely out of my range. I watched a student on the macro pods over the year. I think your analogies have taught me more. Who knows, man? Maybe we'll get there. All right, here's the deal. I gotta go because I have a physical therapy appointment, and I have an interview with Good Alexander. I'm gonna try to move it right now. I got an appointment at 1:15. I'll be back 2:30. All right. I'm gonna let me ask him right now while we're here. I'm gonna say, let me ask him right now because I gotta watch the Anthem stream. Good Alexander, yo, you down to move an hour early so we don't overlap Anthem stream? I'm either gonna do it an hour early or an hour late. One of the two. One of the two. So I'll let you know. It'll either be 3 or like 5:30. I think Market Bubble, when Anthony was going to talk about crypto, is like 4:30. That's going to be a low key great. That's going to be a crazy one. I'm not going to lie. Anthem, lock in, bro. Coffee, whatever you got to do. Get right. Because, yeah. This is going to be fun times. Do whatever you got to do. Also, YouTube, definitely all-time high YouTube viewers. I guess I gotta start acknowledging, bro. If you watch on YouTube, like, can you just watch? Like, what's up? You just watch on Twitch? Maybe we should start arbing the chat. I think there's a way to do that. Also, bro, no way, dude. I need this, please, man, please. Look at this. They threw me into the FWA collection, dog. They got me in the fucking collection. So cute. I want to squeeze the little cheeks. I want to see a CZ reply on this as well. The CZ interview. You know, I interviewed CZ on 10/10. You realize that? It was 10/10. It was 10 fucking 10. All right. Yeah, YouTube gang, guys. You all won't catch me. Will not catch me watching on Twitch. Come on, bro. Come on. All right, guys. I am leaving. Wild day. Let's just stay focused. Focused, tunnel vision. Good Alexander. I'll let you know. And some stream as well today. I am out. I will catch you when I catch you. I'll see you when I see you. I'm live every morning, 8:30 a.m. EST on my 2 weekend streams, but don't hold me to it. Have a great rest of your day. Love you, motherfuckers. Peace.